ASML certainly will be one that we'll be watching. We'll watch how that ripples through into other semiconductor names, though, in Europe. That'll be interesting to see how widespread is the positivity. We spoke to the CEO. He was very positive about the business, certainly the clarity that they've got from some of the big spenders on their kit and indeed the hyperscalers at the end of that supply chain. So that's interesting. They're also cutting jobs. LVMH in focus. We talked about the areas of weakness around fashion and the handbag side of things. There is some more strength in jewellery, but maybe that's not enough to offset. And Volvo Trucks in focus as well. A slightly more positive line coming through them. There's slight improvement in some markets recently, stabilisation in several markets. An interesting line to watch, Guy.
Okay, here we go. ASML versus the CAC Currents. Are we going to see how big is the spread? How big is the outperformance we get from the Dutch market? How big is the underperformance we see out of the CAC Currents on LVMH? And maybe that spreads through into the rest of the luxury space. At the moment, we have to contend with what is happening with the FTSE 100. That's the commodity trade. Are we going to see gold represented there as being a positive story? Are we going to see some of the basic resources stocks going higher? Stock 600 is down, but we're waiting. We're waiting to see how ASML opens this morning. The AEX might take a few moments to get going, but the CAC has already got going, and it is down by 0.7%. So weakness in France this morning on the luxury front. Is that going to affect other markets? Maybe Switzerland could be affected by that as well. But let's see how the AEX opens. It could take a little while, I suspect, to get the Dutch market going this morning. ASML is a huge part of it. Are other chip stocks going to be moving as well on the upside? It looks like we're probably going to be seeing some upside performance coming through from that space. But I've got to wait. The moment has not yet arrived when we see how big a day the AEX is going to have and what that is going to mean. But Nasdaq futures sharply higher. AEX futures sharply higher. Tom.
Tech as a sector gaining 0.4%. Basic resources, to your point, around the FTSE 100 gaining 1%. That's top of the list right now. We'll see how that changes on the tech story as we get the print. ASML is currently halted, it looks like, so brace yourself for a big pop higher for that stock. Energy, of course, gaining 0.8% as well. LVMH tumbling around 6%. So that's the drag. Consumer as a sector, the biggest loser, down 1.7%, Anna.
Yes, and it does seem as if the LVMH story is rippling through others in the sector. So that stock down by 4%. Christian Dior also down by over 4%. Kering down 3%. Moncler down 3%. Burberry also weaker. Richemont not so bad. And we'd already heard from them that they, with a slightly more leaning towards the jewellery side, maybe a bit more cushioned from some of the trends we're seeing. But that's the luxury side of things, and consumer products and services, into which luxury falls, is the weakest performing sector this morning here for European stocks. Basic resources and energy doing better than technology so far today. But to your point, Tom, we have not got ASML just yet because it is still halted. But the rest of the tech sector, a lot of it at least, going higher.
What is interesting is pharma's also getting hit pretty hard this morning. So some of those names definitely pointing on the downside. So LVMH down by 4.2%, but Roche, Novo, Novartis, Astra are all down pretty sharply as well today. So the pharma trade is under pressure, but I'm waiting. Infineon has just opened. Infineon's just opened 6% higher.
Yeah.
So the chip story in Europe is getting a positive read across from what we're seeing with ASML. It's a tale of two companies today, and the ripple effect that they're causing in the European space.
Yeah, Infineon up 6.6%. ST Micro over in the CAC current, of course, up close to 6% as well. ASM International over in the Netherlands up 3.9%. Again, ASML shares halted in Amsterdam after that record quarter. The moment we get the print, we'll bring that to you, of course. But we can broaden out the conversation now.
Yeah, absolutely. Let's bring into the conversation Beata Manthi, Head of European Equity Strategy over at Citi, and the perfect voice to have with us this morning as we're wrestling with a lot of themes in equity land. Beata, thank you very much for being with us. Let's start with the strength that we're seeing in European tech today. You, not long ago, last week, was it, downgraded overall expectations for European stocks, but you still see some upside this year. Where does tech fit into that? Because it does seem as if Europe has a part to play in the phase of tech strength we're in right now.
Absolutely. So what we've done a week ago, we've changed our preference within the rest of the world. So we continue to see the diversification trade being strong this year. But what is happening in the euro-dollar and the tariff risks are emerging, and you can see from the consumer stocks today, the demand, the international demand is still not there. That all puts a crack in the entire delivery of EPS in Europe this year. So last year was easy. Investors were very bearish, valuations were low, the market was pricing EPS contraction, right? Well, we knew the EPS was going to be under pressure, but nothing what the market was pricing in. This year, of course, last year the market has re-rated ahead of this delivery. Analysts have had 11% expectation for this year for EPS. We have 8%, still very robust.
Okay.
We haven't changed any assumptions.
Yes.
We continue to have the same target. It was, as of December, was 11% upside. It's probably 5-6 now, so that hasn't changed. But I think what is happening geopolitically around the world really re-emphasizes the domestic trade in Europe that potential is going even stronger, and fiscal delivery issuance. But the international story, and this is where the broadening was based on, that has cracks. And euro-dollar in the near term could be a problem.
Okay, there's a lot in there, Beata. You didn't mention tech. I asked about that, but
yes,
that's fine.
I will.
No, we'll get back to tech then. Let's linger on the broader theme, because it seemed as if the time when you downgraded stocks was when we got the tariffs threat. Then the threat was removed, but it sounds to me like you were downgrading stocks for other reasons. It wasn't just that President Trump was threatening tariffs over. No,
it wasn't about the tariff. It wasn't about the tariffs.
So you're not tempted to upgrade now as a result?
No, it was never about the tariffs. It was really about the new world order, what happens to the currency, what happens to the international trade, and we re-emphasize actually for the domestic story. So perhaps investors have to be selective, just like they've been last year. So Europe has done very well, but through a narrow set of sectors and stocks, right? It was domestic story, and the international story has been under pressure. This year, probably it won't be under so much pressure, and we see from tech today that's an international story. Yeah. Sales are amazing. AI trade is well and alive, and we see confirmation of that from around the world. So Korea earlier on, Taiwan, right? It's all happening from the US probably. We are going to have very positive reporting season. So we are still very bullish AI, but we also think that this AI trade is broadening. It has already broadened to EM last year. So EM is our top pick globally. Europe is only neutral. So we've downgraded the preference, basically, swapping it with Japan. But going forward, really, the investors' focus should be on delivery. Tech is delivering, right?
Tech is delivering. We're seeing that reflected in the SML share price right now. So popping 6.5% to a record. This is a market cap of above 500 billion right now. So it's by a long stretch the most valuable company in Europe. We won't get into name specific companies, but does European tech have a bigger role to play in the AI theme this year?
We think Europe overall has a bigger role to play, because we think it's not only broadening, but investors' focus is starting to shift to the question, is it working? So from enablers to adopters, this is one of our big themes. Of course, enablers and what we are seeing in the European data today, that's a catch-up trade, right?
Yeah. But adopters, that could be finance, banks.
That is a very broad base of sectors.
Okay.
And for us, physical AI, that's, of course, big focus. You focus on, in that space, on industrials, big sector in Europe.
So that's robots.
Yes, that's
very excited by robots.
That's robots. But industrials are at the crossroads of where the AI is going and where the money is coming from Europe, right? So the fiscal stimulus going a lot into that sector.
Do they have to be domestically focused industrials that are adopting AI? Because you pointed to your concern about the internationally exposed European companies.
So the industrial space, yes, for the first question.
Okay.
Now, there will be names that we have in our basket of stocks for the fiscal delivery that will benefit a lot from the fiscal. They will be receiving orders. They are already receiving orders, but they also have international exposure, right? So it's a bit of a mixed bag. However, the domestic story, of course, have been overwhelming on their performance. So industrials, basic resources, and banks, our top picks in terms of sectors for Europe. Within tech, we are bullish semis, but software not as constructive as in semis. Let's put it this way.
Can I just come back to this idea that the euro is a negative for Europe? Because I don't really understand it. Because if I'm a US investor, like the FTSE 100, up 2.82% so far this year. In dollars, we're up by 5%. I'm a US investor. I'm looking at Europe. Looks great. Asia looks better, maybe, in terms of the performance we've seen so far this year. So why is the euro a negative? I get it from a kind of bottom-up perspective, but from a top-down, why is that the case?
You're right. From top down, as I said, what is happening, it's only reinforcing the case for diversification. Because if you're a US dollar investor and you think your currency is going to weaken, of course you're searching opportunities outside.
Do you think
right?
they're going to?
So that's going to continue. Our models point to, and this is the feedback I get from the investors, that at the top of everybody's minds are the emerging markets right now.
Yeah.
Right? This is where everybody is focused. Europe is secondary, but more selective. So investors see upside in the domestic story. Of course, euro strength helps the domestic story, but really it's not very helpful for the international story. That's all. Europe has done very well in this type of environment last year, right?
So why would I put money to... Okay, let's go back. Why would I put any money to work in Europe if I think that Asia is going to outperform? Asia has all the pieces in the puzzle. So what's the spread going to be?
Well, look, within the Asia or emerging markets, our top recommendations are for Korea, for Taiwan, and also for South Africa, because that's the gold trade, right?
Okay.
But we are going to EM, investors are very concentrated in AI. Of course, it's doing great now, but we know it could be a volatile year as investors move from one winner to another winner, and that shift produces volatility. So our view is you want to diversify. You don't want to have all your money in AI. It is a very important thing, but there are other things going on. You just follow the money. European governments are spending a lot of money on fiscal, right? Why not putting a bit of money into that?
And recently I was reading that the MDAX is not keeping up with the DAX in terms of factoring in the benefits that fiscal spend brings. Is there a smaller cap story? We've seen actually that since the start of this year, there was a smaller cap story in the States playing out. Absolutely. Is there a smaller cap story here? Because that's more domestic.
Absolutely. That's been our top pick at the start of last year. It has fizzled out a bit towards the end of last year because the international story, large caps have started to outperform. But when I look at the earnings prospects for this year, they are double of DAX, or earnings prospects for mid caps in Europe, broader Europe, double than for the large caps.
Because the Germans haven't spent as quickly as we thought they were going to. Does it all come through this year?
I don't know. It depends what you were expecting. Perhaps the expectations were too high, right? It was the issuance the budget has been only approved in September. The issuance has only started in October. Actually, what they are doing is not bad. And when you look at the data of industrial production, factory orders, domestic factory orders, they are beating expectations and picking up. But we are only starting that process now. Fiscal is only starting to be expansionary this year, and EPS has been under pressure last year, right? So.
Beata, what do you do with the UK? Guy mentioned in dollar terms the upside for the FTSE 100 about 5% year to date. What do you do with the UK equities?
So.
They're very cheap, even after the big gain.
Be selective. Nothing is cheap anymore versus its own history, right? They are cheap in relative sense versus the other regions. So what we like within the UK, basic resources is one of our top picks. Banks, of course, and industrials, defense stocks, right? The UK, the FTSE 100 has the highest share of defense stocks as percent of market cap out of any other...
Defense, not defensives.
Defense. Actually, defensives, it's 50%. That's a headwind if you want cyclicality, if the market wants cyclicality. But defense is almost 10% now.
Is dollar revenue an issue for the FTSE?
It is the most internationally exposed market in the world, right? 80% comes from abroad. So depends what happens to the euro pound going forward. That's definitely a big driver.
Euro pound, not...
Sorry, pound dollar. Right. Pound dollar.
Cable,
Too many crosses.
But it feels like currency. Is this a fundamental market or is this a kind of macro market?
It's a bit of both. We've had very macro and geopolitical market at the start of the year. That's going to continue. Like we will see more of that playing out throughout the year. But because valuations are so high, the focus has to be on fundamentals delivery. This is why you see the reaction you see in the reporting season, right, to the numbers. So that's all eyes on earnings, definitely.
I'm going to sound like a broken record now. Do your homework, seems to be the story. Beata, thank you very much
Thank
indeed.
you.
Nice to see you. Beata Manthi, Head of European Equity Strategy, joining us from Citi. The core looks like this in Europe. There you go. Pharma's down, luxury's down, defence is down, tech is up. ASML is up by 6%. Schneider's up by a little bit. Some of the staples are actually moving sideways today. Nestle's not having a bad session. Let's look at the individual moves. I think we're going to start with the chip space. Chloe's here with more.
Good morning, Guy. Indeed, it's a great day for the chip sector here in Europe after ASML reported record fourth quarter bookings. They came in almost a double what analysts had expected. And the company also shared quite an upbeat outlook because customers keep spending money on AI. And therefore, there is growing demand for ASML's tools. And we are up almost 6% on the back of those really positive results, really positive outlook for ASML. And it's driving up the rest of that sector. And in particular, ST Micro is up here about 4.6% this morning, but we are green across the screen there for that chip sector. Moving on to the luxury sector, where we are red across the screen this time, and that is after LVMH dragged down the rest of that sector. So LVMH reported sales below expectations, and the CEO said that 2026 will be a little bit difficult, that it was a difficult operating environment for the company. And so after we saw quite a lot of investor optimism in that luxury industry at the start of the earnings season, we're seeing that reverse now, and we're seeing quite a lot of red there across the screen. Christian Dior is down, Kering down, Burberry down, all in the red today. And moving on, but staying within that same luxury sector, but focusing in on a smaller player, and Ferragamo is also down about 5%. It also reported earnings after the close last night, and analysts said that its wholesale segment was particularly weak, and so sales disappointed as well there. So we are really seeing weakness across their luxury sector. And finally, let's end on miners. We are used to seeing them in the green. They are still in the green today after gold hit another record as investors continue to rush towards safe haven assets. And so we are seeing that reflected in some positive movements for all of those miners, and Anglo-American in particular up about 2.6% this morning.
Chloe, thank you very much. Chloe Melly with the latest on those movers. Let's just throw into the mix what we're seeing on healthcare. Chloe was talking about luxury names going lower. Well, the second worst performing sector is healthcare, and that stood out to us as interesting, so we're having a bit of a deep dive into that. But this is the extent to which we're seeing some weakness coming through on these healthcare names. Suggestions from the team so far: there's an FX effect perhaps of the weaker dollar. If you're a dollar earner, dollar revenue, it could be an area of concern. US politics could be playing in here as well. It was interesting. I was wondering whether it was just a move out of a defensive sector into a more risk-on technology sector, but actually sector by sector we're split half and half. So even though the tech theme is so strong this morning, we're half and half positive and negative across European equity.
We're going to get more context on that tech
and the
theme.
top 600 is entirely flat.
Yes, it's a reminder, isn't it?
News.
Can I just, is it a dollar translation story? These guys, the US pharma market is the biggest pharma market in the world by a country mile.
Yes, exactly. That's what I was saying. So one of the suggestions being their dollar revenue,
is that,
and that weighs on the sector.
Well, it's a reminder with our conversation with Beata Manthi, isn't it? In terms of her view is, and she zeroed in on euro strength and dollar weakness and what that means for the earnings story for European corporates, even as she sees that domestic strength story. On tech, then, we're going to get more details in terms of ASML. Here's the tease for you. Coming up, smoking hot chips. They don't actually make the chips, of course, but they make the equipment that goes into making the chips of those fabs. Record fourth quarter orders at ASML as the AI boom spurs demand at Europe's most valuable company. We'll bring you the context, the analysis. That's coming up. This is Bloomberg.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome back. You're watching the opening trade. We're 20 minutes into the session. If you are invested in the chip sector, you're having a good morning. If you're invested in the luxury sector, you are not having a good morning. That is basically the skinny on what is happening in these markets. There's a gold trade out there as well, but that's basically the theme.
The skinny. I like that guy. Yeah, the losses, in fact, for LVMH are bigger than the gains for ASML right now. But, of course, the market cap is significantly more in the favour of ASML, above 500 billion. The gains now 5.3% for that stock, having been higher at 7% at the start of the opening trade. ASML shares then surging, of course, after the Dutch semiconductor equipment maker reported record bookings for the fourth quarter, and a new share buyback program. In the past hour, ASML has also announced plans to slash around 1,700 jobs. Let's bring in Bloomberg's Charlotte Hughes-Morgan, joining us out of Amsterdam. Charlotte, what really stood out from you, from what we heard from the CEO and from these numbers, in terms of how this company is looking forward?
Thanks, Tom. Yeah, I mean, that booking number smashed through all the expectations that we were seeing coming in to this quarter. And expectations were high. I mean, ASML's share price was already up around 32% since the start of this year. But that 13.2 billion euros in booking really signals just how strong the demand is for ASML's chip-making machines. And remember, ASML is the only company capable of making this cutting-edge lithography machines that produce the sophisticated chips that are powering the AI boom that we're seeing. And so what is driving this record number? It's sustained demand for artificial intelligence. And ASML CEO saying in the statement, look, our main customers, so that's all the major chip makers, TSMC, Intel, Samsung, are really positive about the medium-term market perspective here for AI. They are digging in, they are investing in increasing their AI capacity. You know, we've seen stories about billions poured into data centers and other AI infrastructure, and that's really translating into strong bookings for ASML. And they expect this to continue throughout 2026. They released Outlook that again topped estimates. They expect sales to continue growing, and demand for their most sophisticated machines, the EUV machines, is driving this. It's particularly strong. So that AI demand story is sustainable, I think, is the message from ASML's leadership today.
So, Charlotte, is it a surprise that the company has also announced job cuts this morning? Where are those job cuts coming? What do we know?
So what we know, yes, ASML released a statement at 8:30 CET today saying they would cut as many as 1,700 jobs. That's around 4% of their workforce, and most of those job reductions will take place in the Netherlands, where the bulk of their operations are, but also some in the US. And what ASML said is that these job cuts will primarily be at the leadership level, and they are basically doing this because they've received feedbacks that the organization is too complex, it needs to be more agile, and so they are reorganizing their technology and their IT business units, and as a result of that, there will be some of these job cuts along the way.
Charlotte, thank you very much. Charlotte Hughes-Morgan from Amsterdam. Let's head to Paris now. LVMH reporting a drop in sales for a key fashion unit over the holiday season due to sluggish demand. Bloomberg Intelligence says the luxury conglomerate's second-half margin beat doesn't match the consensus optimism for the year. So joining us now, Bloomberg's Angelina Rascouet in Paris. Angelina, what were your key takeaways from this earnings? A tough day to report up against ASML.
Yes, indeed, Anna. I mean, basically, I think analysts were struck by the cautious tone during the conference. Arnaud said 2026 will not be a straightforward year, that it's difficult to predict the short term. The fashion and leather goods unit, I mean, there's a lot of hopes right now because there's been quite a few creative changes. But right now, it's too soon to tell if Jonathan Anderson will do the trick at Dior because the products are not really available just yet. The bright spot was watches and jewelry, and in particular, Bulgari.
The spirits unit was badly hit as well. Is this a structural? If this is a structural shift in terms of our consumption of alcohol, this is going to be difficult, presumably, for LVMH to turn around.
I mean, wines and spirits, yeah, it really disappointed. In the last quarter, sales fell 9%. That was much worse than expected. It's a tale of two stories, basically. Champagne demand is relatively flat. But cognac, which is really dependent on the US and China, is really suffering. There's a crisis of demand there. In the US, there's a cost of living crisis. People are just not consuming, and they're trading down. So we went to the cognac region last week. We wrote a story for Business Week, and basically producers are trying to adopt drastic measures to reduce the elevated stockpiles of eau de vie, which ends up being cognac, and it's a little bit like OPEC. When OPEC, when prices collapse, they cut production, and cognac producers are basically doing something similar.
Angelina, thank you very much indeed. Tough day to be LVMH. Tough day to be in the cognac business. The view from Paris. In terms of what we're seeing, the Stock 600 is going nowhere this morning.
It's staggering, isn't it? With the AEX up by 1.2%, with the optimism around tech.
So ASML is adding 1.18 points.
Yeah.
LVMH is subtracting 0.49, but there's the sector effect, which is enormous. And luxury is a huge kind of sector story.
It's hardware versus handbags right now. Is that a healthy shift for Europe, longer term?
Yeah. Do we have enough of one and too much of the other? I don't know. Coming up next, we're going to talk about what's happening in AI and the healthcare perspective on the AI story. That's next. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Up in our zone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Happy Wednesday. This is the opening trade. We are 30 minutes into today's session. Across the benchmark in Europe, flat, but that is not telling you the story. What is telling you the story is the AEX. What is telling you the story is tech as a sector driving high. That is the biggest gainer. It is handbags versus hardware, and hardware is winning out. LVMH is a drag on the CAC, currently down 0.8%. The DAX is down, gaining 0.1%. There's the softness, though. It's the luxury goods makers. That is the concern on the handbag side, but it's the hardware that's proving strong for Europe. The FTSE 100 here in the UK also benefiting from another pop in gold, up 0.2%. Guy.
It's amazing, isn't it? This is not a top-down market. The top-down story tells you nothing this morning. If you take a look at the Stock 600, take a look at the numbers, it doesn't really give you an idea of what is going on because it's an offsetting market. One set of stocks offsetting the other set of stocks. 303 up, 278 down. Weightings matter this morning. Volumes a little on the light side, but not by much. Let's talk about where we're seeing the strength and where we're seeing the weakness. ASML obviously is the big story. The lithography story, the chip equipment maker is having a fantastic morning on the back of its numbers. We've faded a little bit in terms of the early moves. We're up by 5%. Infineon, yes, there's other factors going on this morning, but Infineon is a derivative of that story this morning. The chip space in Europe is having a positive session. Volvo is up by 2.28%. Bit of demand maybe coming through from trucks. Is that a signal that the economy globally is getting better? That the shipping story, the logistics story that we'd seen weakness in is now starting to improve? Is that a macro signal we get there? LVMH is weak. We know what's happening there. Tom's just talked about what is happening on the handbag front. It's the leather goods that we're seeing weakness in. The pharma space is weak this morning. Roche and Novo are both down. Now, remember, one reports in Swiss francs, the other one reports in dollars. So can I park the dollar effect out of that? What I'm hearing is that maybe actually what we're seeing here is an effect of the renegotiation under the Inflation Reduction Act, Biden's Inflation Reduction Act, and that is what is affecting the pharma space here in Europe. But we're open to answers on a postcard on this one as to why these stocks are down. But remember, different farmers report in different currencies in Europe, and maybe therefore that parks that angle to one side. Anna, what are we watching?
Let's keep the focus on currencies then, Guy. The dollar suffered its deepest one-day drop since last year's tariff rollout after President Trump said he didn't think the currency had weakened excessively. Bloomberg's dollar gauge slid as the comments sapped the appeal of the greenback and US Treasuries, boosting what has become known as the debasement trade. The UK Prime Minister will be accompanied by some of the country's biggest banks and businesses on his visit to China, which starts today. Keir Starmer seems confident he can do what few leaders have shown the political dexterity to pull off. That is broadening trade ties with China without provoking the ire of President Trump. And Tether has quietly become one of the biggest players in the global gold market. The crypto firm's CEO describes the company's role in the gold market as similar to that of a central bank. The company now holds 140 tons of gold, valued at $24 billion, and has been adding 1 to 2 tons a week to its cash. Tom.
Okay, we're talking about tech today. We're talking about healthcare as well, the pharmaceutical stocks in focus. So let's combine the two and talk about a tech startup in the health space in Europe that has been gaining a lot of traction. Sword Health, making acquisitions as it looks to expand its footprint in Europe. The AI health startup, valued at $4 billion, was valued at $4 billion in a 2025 funding round and is backed by Cola Ventures, General Catalyst, and Founders Fund. We are joined now by the founder and CEO of Sword Health, Virgilio Bento. Virgilio, thanks for your time. Talk to us. Let's start with the acquisition strategy. You're making fresh acquisitions. Talk us through what you're pulling the trigger on and why it makes sense.
Thank you, Tom. Thank you for having me. So what we are seeing is that there's currently a very rapid adoption of AI in healthcare. And so historically, all the new solutions were launched organically inside Sword. But what we are seeing now is that given the rapid adoption of healthcare, of AI in healthcare, we are accelerating our expansion to acquisitions. And we do that for a couple of reasons. Maybe some new solution that a specific company has. In the specific case of this acquisition, it came down to the network of partnerships, the network of global deployments, and also the book of business that Kaya had, which we thought it was very important for us to accelerate our growth.
Okay, so to be clear, this is a company called Kaya Health that you're acquiring, and you're making that announcement. You're making that announcement today. What does it tell us about your broader M&A strategy and whether that's core for you, at least for 2026?
So for 2026, we're going to be very active in terms of acquisitions. This is the first one. We are working in a couple of ones, either in the US and Europe. And so we expect to announce something, a couple of more acquisitions in the first half. And the acquisition strategy really focus on how can we expand into other areas of healthcare, how we can expand to other regions. And so that's pretty much, we've been always very conservative on acquisitions. Now we are being more, I will call it, expansionist when it comes to that playbook.
Virgilio, good morning to you. So Kaya Health, that's the business you're going after this time. Are you going to need to raise more money in order to do that?
No, not for this one. We are indeed raising more money. We are looking to do a $500 million raise in the first quarter. There's pent-up interest from the market for us to do that. That's somewhat connected to the acquisitions to get us some dry powder and some optionality. We are cash flow positive. We've been cash flow positive in 2025 while growing very, very fast. So we don't have cash needs to support the existing business. It's really about the M&A strategy and the optionality that capital raise will allow us to have. And so, yeah, we are looking to do something in the first quarter in terms of raising money.
Okay, do you know how much you're going to raise in the first quarter? You're saying it's not for this deal, is it for others?
Yes, for future deals, really focused on optionality, and we are looking to raise probably $500 million, around $500 million. Could be a little bit less, could be a little bit more, but that's the quantum that we are looking to raise in the first quarter.
Fee, good morning, it's Guy. Where in the healthcare space is AI going to have the biggest impact?
It's honestly across the spectrum. So when you look at the big applications of AI right now, there are 3 big applications of AI. Coding is one, search is another one, and the third one is healthcare. And that's why you see OpenAI and Anthropic that are on the epicenter of the AI revolution going after healthcare. right? And that tells you that they see to their data that healthcare is a very, very important use case in healthcare right now, a real use case, I would say, with real value. And so in terms of the applications that we are currently pursuing, we are using AI to treat and heal people if they have pain, if they are anxious, or if they have urinary incontinence. But at the same time, we are also using AI to scale healthcare operations. We announced this partnership with the Greek government where we are taking care of AI triage. So it's really across the spectrum that we are seeing a very rapid adoption of AI in healthcare.
The story this year around AI is people are looking for deliverables. They want to see the productivity improvement. What productivity improvement do you get when you apply AI to those kinds of spaces you've just outlined? How much better is the outcome once you start using AI in the healthcare space?
So in healthcare, there's this paradoxical thing, which is the highest quality of care is actually the cheapest form of care. And what this means is when you are able to provide high quality of care to someone, that patient has their problem fixed, and they don't need to go after wasteful healthcare services. An example of that is someone with physical pain, back pain. They do non-invasive care. They have their problem fixed. They don't need a very expensive surgery down the line. And what the AI enables is for people to have access to that high-quality care in the comfort of their homes in total convenience and as accessible as running water. And what that leads to then is to massive savings for payers, for national health systems, for governments on the cost of healthcare. One data point there is we saved, since our market launch in 2020, we saved our clients more than $1 billion in wasteful healthcare costs. Really additional levels of care that are not needed because AI was able to fix the problem of the patient. And the same thing with AI triage, as an example. When people are able to just call a number, talk about the problem, and get recommendations on what to do, get guidance, they don't need to go to the emergency room, which is the more challenging, costly solution to a problem in healthcare. And so we really see not only in terms of quality of care, not only in terms of access, which of course are of paramount importance and the number one thing why we apply AI in healthcare, but then you see these really big impact on healthcare costs by removing healthcare waste with high quality care. And that's actually the big tailwind behind our growth, not just in the US, but also in Europe, is the fact that AI in healthcare not only drives quality significantly higher, but also, and I would say equally important, drive costs down. And that both things are very important in healthcare right now, and AI is able to deliver on both.
Virgilio, in terms of you mentioned your partnership with the Greek Health Ministry. Are you looking to seal partnerships with other health ministries around Europe? How far are you to looking in those deals? If you are, is the NHS up for grabs here in the UK?
We are doing really good work with the NHS. We have several trusts and ICSs as clients. Really, in the NHS, the problem is really access, right? There's a big waiting list for all types of care, which traditional care models based on human clinicians, given the difference between supply and demand, cannot deliver on. And so AI really has a big impact on removing those or eliminating those waiting lists. And that's the work that we are doing in the UK NHS. More on the component of delivering care across all of our verticals of care. We are now starting to work globally, not just in Europe, but globally with other countries on the AI triage solution, because AI is a very important piece of healthcare because it's the front door. If you get triage right, you get a much healthier healthcare world. And we are seeing that AI can do that much more, I'll call it in a much more scalable and effective way than a labor-intensive model.
Virgilio Bento, founder and CEO of Sword Health. Thank you very much indeed on that acquisition and plans to raise maybe up to $500 million in the first quarter of this year. Let's get to the auto space right now and look ahead to earnings. Of course, Mag 7 numbers coming through later today. Tesla amongst the mix, of course, reporting earnings later. Bloomberg Global Autos editor Craig Trudell joins us now. Craig, is this less for Tesla? Is it less about their cars and more about the future prospects of robotics and driverless robo-taxis?
Yeah, I mean, it's a remarkable time for Tesla because I think Elon Musk really is sort of demonstrating how much he has sort of sell-side analysts in the street, like kind of wrapped around his finger, right? His earnings for his company are going in the wrong direction, where everybody thought they were going to be going. It's very dramatic, the sort of reset that we've seen, and yet the stock price has been, quite buoyant, and it's still a very valuable company. In spite of the fact that sales continue to slip, and a lot of questions about just how much progress he's making on some of those things. The humanoid robots are coming maybe late next year, ready for selling to consumers, and then the quote-unquote robo-taxis only just recently has he demonstrated an ability for some of those to be going around Austin, Texas. But maybe with trail cars kind of helping them out. So a lot of questions about, what exactly he's doing.
As well.
Yes.
Doesn't sound sustainable.
I really want to know what these robots are going to do for us, but we might have to expand on that conversation.
You want a humanoid robot?
Basically, that's
sound
basically
like it,
what it
doesn't
is. Yes, yes. In my house, this would be helpful. Let me broaden the conversation, though, Craig, because I want to talk to you about what's going on with SpaceX. The FT is reporting a possible date for the SpaceX IPO. Now, we always talk to you about cars, but these are also vehicles that go somewhere. So what are your thoughts on the date that we're hearing about here for this? What do we know?
I mean, this is a fascinating report from the FT. The idea that a couple of things are sort of pointed to as reasons for why they're targeting June. One being a couple of planets align then, and Musk is quite fond of puns. He when he acquired Twitter, he famously walked in with the sink and said, "Let that sink in." This one is, if this report is true, the obvious one is, the planets have aligned for SpaceX to go public. I guess the drum tick there after that. And then,
we'll fill in the sound effects.
Yeah, I guess the other factor that FT points to is it's his birthday. And so, who wouldn't want to celebrate their birthday with, taking their company public at an incredibly high valuation and maybe breaking a record for the amount of money raised in an IPO.
That's the world we're in now. It's puns and birthdays, and they tell us
and immense wealth.
Yeah, he could be celebrating as a trillionaire, couldn't he, on this,
Indeed,
if things continue as they've been going. Craig, thank you very much indeed. Looking into Tesla and with the details around that potential SpaceX IPO, of course, our Global Autos editor, Craig Trudell. Coming up, by how much has the UK Technology Secretary said AI can potentially boost economic output by in a single year? The answer when we come back. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. Now, we're laser focused on AI once again today with ASML and SK Hynix. So, before the break, we asked how much has the UK Technology Secretary said that AI can potentially boost economic output here in the UK in a single year. 140 billion pounds. That is the assessment from UK Tech Secretary Liz Kendall, promising, of course, to offer training in AI for all UK workers. In a statement, her department says online courses developed by British industry will be made available to all UK adults. Anyway, aspirational, potentially, but they certainly need the growth, and maybe it comes through from AI productivity.
Why are drug stocks down today? Why are pharma stocks under pressure? Let's find out. Sam Fazeli has hot-footed it to set from the Bloomberg, the intelligence side of the building. Why are drug stocks down today?
So I'll give you a few possibilities, right? Okay. One is that we had the Inflation Reduction Act list of new drugs for 2028, which will be negotiated by the government in the US. Yep. Impacts Medicare. And that shouldn't have been a surprise, but it maybe has reminded people that this drug price pressure is still relevant, even if MFN stories have gone by the by. And on top of that, I think you've got this great story out of ASML. Maybe we've got tech back. And pharma has performed so well. Yeah. Maybe you take some profit there.
Is that tech back or take back?
Take back what you need, your cash, and put it into tech.
Yes.
Take back technology stocks. Yeah.
Excellent. And the other thought we were having this morning was around FX, fast-moving narrative. Yes. Is there a rule of thumb you can give us for European pharma what these FX moves mean? Because they're not all the same. They don't all have the same geographical footprint. They don't all report in the same currency. Is there a rule of thumb around FX?
Yeah, well, obviously the ones who report in US dollars, such as Novartis, for instance, they have that direct FX impact. But also, if you think about it, this push for MFN, which supposedly has increased them moving manufacturing to the US, should cushion some of it at some point. But of course, by the time you put your spade in the ground and get the manufacturing going, it's 5 years. So if all your costs have also moved into the US dollar and you're selling in the US, it doesn't matter so much for your impact, but that's going to take some time. Okay. So, but generally, FX, weaker dollar is not good for pharma.
Okay, we will watch that, and we'll watch their capex plans as a result. Sam, thank you very much. Sam Fazeli from Bloomberg Intelligence with the latest on that sector. Coming up on today's daybook, so these are the things that we're watching for you today. 10-year auction out of Germany. Prime Minister Starmer in Beijing. That is fairly imminent. He's going to be there really soon. A Canadian rate decision, of course, the Fed rate decision, and plenty of tech earnings. We, Guy, are going to speak to Skylar Montgomery-Koenig.
Are we?
Do that? Yes.
She's here. Well, yes. We probably should. It would be rude not to. You excited about the Fed?
I mean, I was more excited before we got the dollar move yesterday, and that's the more exciting theme. I think certainly something to watch because we do have 4 new voting members as the usual turnover happens in January. We're looking at dissents, we're looking at communication. I think the baseline expectation is that you'll get 2 dissents, so any fewer than that, and it's a hawkish reaction. On communication, the data's been stronger out of the U.S., and what you've seen as well as Powell's press conferences tend to be a little bit more hawkish, so that could be a boost to yields. And it could be for the dollar, but I think there's much more going on elsewhere that's kind of pulling in the other direction.
She's almost convincing me that I need to stay up tonight and watch it.
I still think the press conference is going to be pretty gripping.
I do too, yes, I do too.
This is one of the few people who's actually stood up to President Trump, so we'll see what he has to say, Jay Powell, when he's quizzed on this. Also, if he says anything to support the dollar, and a nod around that, high yields. Skylar, what are you making of the broader market movements that we're seeing today? And Guy's been pointing out that on a headline basis across the benchmark, we're not seeing much, but there's some really interesting stories at play. Do we start to see more conviction around the AI theme and how that breaks out with the earnings out of the US later today?
I think it's a hard one because what we saw last earnings season, and actually what we've seen repeatedly is that out of the AI stocks and tech more broadly, is that you get earnings that come in very strongly, but you need a really big surprise. And this is generally true across earnings where you need a big surprise for a big market rally, but you need a little downside surprise for a big sell-off. And so that skew means that if you just get okay earnings, if you get a return on investment relative to that capex that's strong, you just kind of toddle along because that's the baseline expectation now. So it means you maintain those valuations. But I think what's more important in markets currently is what's happening from the macro, because you're having such big moves in yields in the dollar, and those are feeding into your equity markets more so than earnings season, I would say, actually.
And speaking of those FX moves, the euro-dollar down by 0.5%, and we've been talking so much about earnings today, maybe we need to spend a little moment on this story because it has had an impact. Martin Kocher of the ECB, Austrian, important, as Tom pointed out to me earlier, talking to other media and saying that there's no need to change interest rates right now. He's comfortable with them right now, but there could be a reason to cut interest rates if the euro keeps moving in the way it does and it weighs on inflation. I mean, what do you make of that? I mean, it's quite a sizable move for something that was quite heavily caveated.
Yes, I mean, the euro problem has been a problem all of last year, right? We already knew this. When you have a very expensive euro, which it is or was relative to rate differentials, and certainly the move that we got yesterday was out of line with fundamentals, as in there's a gap that's opened up between rate differentials now that points to some kind of premium. So that weighs on export competitiveness, which is an issue already for Europe because Germany in particular is competing with China. China's no longer sending as much to the US, so they're competing in the same markets because of tariffs. And you also have the inflation bit come into the picture where you have downside risk to inflation. Now I think, yes, you could have another cut priced in for Europe. That could certainly happen, but I'm not sure that's the determinant of what euro dollar is going to do because of what's actually been driving in the past day, as well as the fact that it's one cut.
The euro is up on a 2-day basis, like a lot. So we had the Trump move, and then we've unwound a little bit of it. And now we're still with 119, nearly 120.
Are we clear on what the pain point is on the earnings front? Is it 122? Is it above that? We've been discussing the numbers in terms of the earnings squeeze for those European companies that have that export function. Whether we get to a point that really has a material impact.
But if you're a US investor, it's fantastic. Put money to work in Europe. It makes it even more attractive.
Shall we have a moment to flag the tech earnings coming
Let's have a moment.
later today? Meta. This is that moment.
Yes, this is that moment. Thanks for the cue. Yes, thank you. Skylar, thank you very much indeed for walking us through the broader markets. We also have earnings coming up. ASML's done a lot of the heavy lift, of course, in the European session. Then we look ahead to Meta, we look ahead to Tesla, we look ahead to Microsoft, the Azure.
How high is the bar?
It's kind of saying it's pretty high, right? You have to continue to convince around the capex, which is paying off for ASML because they're spending, and it's paying off for TSMC.
It was hardware versus handbags in the European session. Now we weave in something beginning with H for the US session and all those tech earnings. We will work on that by tomorrow.
That's it for the opening trade. The Pulse is up next. This is Bloomberg.
world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You said they ask interesting questions.
Bloomberg Television. Top experts, great questions.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The AI trade is rekindling after ASML smashes expectations, but the Dutch semiconductor equipment giant also says it will cut around 1,700 jobs. The dollar touches its lowest level since 2022 after President Trump suggested he's happy with the decline, saying the greenback is doing great. Plus, the British Prime Minister is the latest world leader set to arrive in China after insisting that Britain does not need to face a choice between Washington or Beijing. So this is the markets that we're looking at. Again, technology stocks seem to be driving most of the global indices after a sharp increase in orders at ASML added to this fresh fuel to the AI trade. Now, the dollar pretty much steady after its worst performance since 2022, posting gains against all major peers. And then, of course, we look at gold because it's above 5,000, currently 5,295. Look, let's also take a look at the European markets map. But I have to say, this upbeat mood in stocks also comes ahead of the Fed's latest policy decision, with investors now expecting interest rates to remain on hold at about 225 basis point cuts priced in for 2026. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the AI boom is back in the headlines after ASML, the world's top maker of semiconductor equipment, smashed expectations. But first, let's begin with the dollar touching its lowest level since 2022, fueled by President Trump's comments indicating he's comfortable with its recent decline.
No, I think it's great. I mean, the value of the dollar. Look at the business we're doing. No, I'd want it to be just seek its own level, which is the fair thing to do. You could have it. I could have it go up or go down like a yo-yo.
Well, we're now joined by Jennifer McCune, Chief Global Economist at Capital Economics, and Neela Richardson, Economist at ADP. Thank you both for joining us. I'm so excited about the day to come with, expectations of the Fed. I know it's independence. He'll probably push back on that, but also some kind of trajectory. Jennifer, what are you expecting actually to hear from Jay Powell today?
Well, I think probably a really balanced kind of review of the US economy. Obviously, we've had really good data out of the US economy lately. On the activity side, consumers holding up well, that AI investment boom continuing, but also on the inflation side, things seem to be softening a bit, perhaps fewer concerns about inflation. So I don't think we'll see any hints of imminent moves from the Fed. Relatively balanced. Yes, likely some pushback against threats to the Fed's independence, of course, again. Possibly some comment on the dollar as well. It'll be interesting to hear whether Powell stresses any potential inflationary risk or other concerns around the dollar.
Neela, what's your expectation from the Fed? And again, what's your take on dollar? Does it decline further from where we are now? And good morning.
Good morning. Good to see you. Well, in terms of the Fed, the headline numbers, and I agree with the previous comment, are very strong. You look at the unemployment rate, 4.4%, GDP growth out of the third quarter still strong. And what the Fed has commented on lately is productivity growth, which is the elixir to sticky inflation, has been strong as well. So all the headline numbers are pointing in the right direction. So that is at odds with the dollar weakness that we're seeing. And I think it is also pointing to the direction of the rest of the world being a bit more resilient and having some investment opportunity as well. So the Fed is facing a complex situation, but the headline numbers coming out of the economy are strong. And so that puts them on pretty solid footing.
Anila, several Fed officials have been signaling that rates are now in the right place to shore up unemployment and keep downward pressure on inflation. What are your thoughts on inflation?
I think inflation is going to stay sticky for a while. I think this last mile is going to be hard to get back down to the 2% target. And as evidenced by wages, wage growth has been quite robust, much more robust than we saw during the 2010 to 2019 period, where wages were barely keeping up with the pretty low inflation numbers that we had now. By ADP's measures, wage growth has been, like I said, pretty strong. And so that puts a floor on inflation that wasn't there before. And then you add on other constraints on the economy. It's going to be a challenge getting back to 2%, even though we're going in that direction.
Jennifer, how do you see, again, the U.S. economy performing, also given some of the threats on tariffs and the fact that, there are question marks on inflation, especially where the dollar is?
Yeah. Well, the economy, of course, has been really perhaps quite surprisingly resilient to tariffs so far. And what we've seen is that any drag from tariffs has been offset by the fact that, for a start, the revenues have been recycled back into the economy through fiscal policy. And also, you've had this AI boom going on at the same time, which has really helped to shield the economy from any effects. And I think we'll see that continue as long as we don't see any really large tariffs impose these threats against Canada, threats against the EU. I think they also pose a threat to the US economy. Assuming that those things don't come through, I think we'll see continued resilience on the tariff side of things so far as the US is concerned, and a continuation of this positive AI story helping to support the economy.
Yeah, we'll get onto AI in a second, but now when you look at tariffs, I mean, it was very clear at the end of 2025 that a lot of economists, we forgot to speak about tariffs, right? It was kind of like a story of lost 12 months. We got through it. The economy's fine. What did January teach us that they could come back with a vengeance and kind of change the economic dynamics?
Two effects. One is input costs, especially for small firms and medium-sized firms who are price takers in this market. They can't change their suppliers or their supply chains very easily. And right now it looks like they're absorbing that cost, but that comes with the added cost of maybe a slowdown in hiring, which we've definitely seen in the labor market. The second effect of tariffs has been overall economic uncertainty. And so what we saw at the end of last year is a little more certainty in terms of tariff policy. If that is upset at the beginning of this year, that uncertainty could bleed into decision-making like hiring. So as long as we have a stable policy, I think firms can adjust. When things are uncertain, it's a little harder for them to plan long-term, and we definitely see that play out in the labor market.
And Jennifer, do you see a move away from U.S. assets? It could be dollar, but also treasuries?
No, not greatly. So to some extent, yes. I think we're seeing China, for example, reduce its holdings to some extent. But the question there is really what is the alternative to US assets? And I don't think there's a very strong one at the moment that would really threaten the dollar's position and the position of US assets. Europe, for example, just doesn't have a commonly backed asset that's on the market right now that could be a serious alternative.
Nela, I want to first of all listen to what the ASML CEO told us this morning, and then I want to ask you about AI. But here's the chief executive.
The last 3 months have brought a lot of clarity. And I think what you see basically is that the semi-industry, our customers, start to believe that this AI demand is sustainable. And therefore, they have moved into building capacity, and they are moving very aggressively. And I think this has been very nicely translated, indeed, into a record booking number. So that's, of course, very good news for the midterm.
Nela, you're a labor market specialist, and I read a lot of research saying it will displace a lot of workers, but actually it's a minimal amount and over a longer time than we think. And then you see research where it says, look, 50% of people will lose their jobs in the next 5 years. You've done a lot of research on this. Like, where are we?
Well, if you look at where the U.S. economy is building jobs, it's not in AI exposed sectors. It's in healthcare and leisure and hospitality. And while AI will revolutionize healthcare over the long term, the jobs that are being hired right now are home healthcare aides, nurses, those people-to-people interactions. Same with leisure and hospitality. So what we're seeing in the AI exposed fields is an impact with early career. So you think about the jobs that AI right now is much more relevant to. It's those jobs with tasks that can be easily automated, and those are akin to AI exposed fields like software developers and customer research, customer service analysts in early career. But AI is also augmenting more tenured, more complex jobs. So definitely a split. And when I talk to employers, it's really how to get those early career young people engaged at a time when AI may be actually changing those roles quite significantly.
I mean, you've done an ADP People at Work workforce sentiment, and I was struck by the fact that 85% of workers anticipate AI will affect their job within a few years. I mean, you feel it around you, right? A lot of people ask you, what should my kids study at university? A lot of people say, will my job exist in 3 to 4 years? Does it mean that they're also retraining, or is it going to be problematic for the U.S. in 4 years?
That is the biggest question I get. What should my kid be doing? I always say, if you can go into HVAC, plumbing, or electrician, you're in pretty good stead. But in reality, not everyone is going to do that. And what will be different about our jobs is not our jobs themselves, but our tasks. AI is a very micro tool. It affects what you do on a day-to-day basis, but it may not affect your occupation. And that's a shift in how we think about productivity booms. So what it will require from employers is, as you said, Francine, this upskilling, reskilling, helping workers transition through different tasks. And our work, which we are doing at ADP in connection with Stanford, is figuring out what those high-value tasks will be in an AI future in order to help employers move their workforces in that direction.
And Jennifer, it's amazing. I mean, I was in Davos speaking to the WTO head actually only last week, and she was saying, I mean, the numbers around trade that is really data centers being shipped around is incredible. So how much is AI supporting our economy now?
It really is, and that's definitely a counterpoint to what we're seeing in the labour market, where yes, we're seeing some dislocation, we've seen some job losses, particularly in IT. But on the other hand, it's really boosting demand, it's boosting trade, not just in the US, but in kind of Asian economies that are getting a really significant boost from this AI trade. So long as we're seeing AI boost demand, so long as that continues to happen, It's leading to improvements in productivity too, which might allow lower interest rates in future because of the downward influence on inflation. That's all positive for the economy. So yes, near-term dislocation in the labour market, but I think if we look to the medium term, this is a positive, and it will create other jobs, as Nila was just saying, around the area. So as long as people can be redeployed in time and that demand boost keeps up, I have a very positive view about the implications for the economy.
Now, I mean, this is, we talk a lot about valuations. As an economist, could you see an AI bubble bursting and the Fed needing to step in, or is it something that we need to stress smaller at the moment?
Yeah, there's, I think, two different ways of looking at that, Francine. Is there an investment bubble in the short term? I think that's an open question that markets will decide. There is a lot of infrastructure being built right now. And so there is a secondary evolution of where we are in the AI picture, is how to monetize all of this AI investment. That's a separate question to whether or not AI has the potential over the long term to provide productivity and growth and higher standards of living for the world. And I think in the long-term trajectory, AI does have that potential. In the short term, there's likely to be transitions, especially as the infrastructure, data centers, internet networks, the labor required to build this infrastructure is still in transition. So two separate questions, but long-term trajectory is still very solid and positive, not just in the US, but for the world.
Okay, Nila, thank you so much. It's nice to see you in London. Jennifer McCune, Chief Global Economist at Capital Economics, and Nila Richardson, Economist at ADP. Now, coming up, the French Prime Minister survives another ousting attempt. We'll hear about what this means for his budget next. And this is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, France is on track to deliver a budget next month after the Prime Minister, Sébastien Lecornu, survived another confidence vote. Well, earlier, the French Finance Minister, Roland Lescure, spoke exclusively to Lizzie about what he believes that outcome means for the budget deficit.
After yesterday's formal adoption by the lower house of the parliament in France, we still have to go to the Senate and back to Parliament, so it'll probably be another week before we have a final adoption. But after yesterday's vote, the spreads between OAT and Boone is smaller. than it's been since June 24, which was the snap election. That says something, again, about the credibility, about the lowering of the political risk premium, and of the fact that we're on track to fiscal consolidation. So there's still a lot of work to be done, but we were on track with what we had planned last year, and we will be this year.
Does that say that the crisis is over?
Stability has got a value, and I think it's being priced in at the moment, and I value that. There's going to be an important election in about 15 months from now, and between now and then, our job is to make sure that there is political stability, that there's fiscal consolidation, so that candidates can then propose French people with, hopefully, ambitious programs that they can pick from. And in the meantime, we're going to be working to make sure that France is stable, that the G7 works well, and that, France and the world are in a better place. And there's certainly enough uncertainty that there's a lot of work to be done between now and then.
Well, yeah, I'm struggling to imagine how you'll reduce the deficit in 2027, when, as you say, it will be an election year. Will you get rid of the extra tax on big business?
We have a budget this year, 26. That's a budget of stability. As you said, we're lowering the public deficit. We are doing 50-50 expenditure cuts and a bit of tax increases. We're going to have to work on the 27 budget, but give me maybe a week or two to enjoy the fact that we have passed the budget for 26, that we have respected our targets for 25, and that, yes, there's more work to be done, but so far so good, let's admit it.
I know you've maintained a tax on large companies that was meant to be temporary. Is France still pro-business?
It is, and I'm here hopefully to convince your auditors that we still are. We've been the most attractive place in Europe for the past 7 years. Barclays Bank has just announced that they're moving their headquarters to Paris from Dublin, and we want many more. I think fiscal consolidation and political predictability and stability are two important parts of the parameters that people are looking at when they look at France. We want to streamline procedure. We have a great labor market. We have improved the functioning of the labor market. We have fantastic engineers, traders. AI is on the verge of a big boom in France. You know that France is the place last year where there was the biggest amount of investment in data centers from foreign investors in the world. That says something about what's going on in France. So again, look through the waves, look at the fundamentals. France is doing better, and we're going to make sure it keeps on doing so.
That was the French Finance Minister, Roland Lescure. Now, for more on France's budget, Alan Katz, Bloomberg's Paris Bureau Chief, joins us. Alan, I mean, this was a minister on good form, right? He was kind of like relieved that they can finally move forward. The spread between French and German debt has narrowed pretty sharply over the last week. Does it mean that investors think the French deficit is no longer a problem?
Well, I mean, I think he's got a point, Roland Lescure, when he says that stability has a value. Like, it really has proven to be so over the last 18 months in France, far more than the deficit and what is France's deficit going to be and how big is it going to be. It is the biggest in the euro area, which generally is, bad. Bond investors in particular tend not to like that. But they've really shown that, like in moments of political instability in France, the spread between French and German debt blows out, and when things start looking better, the spread comes back in. And now it really does look like it's going to be much more stable for some time, and you really see that reflected pretty immediately in bond markets, and that's quite important for France because France, has a lot of debt, and so when you have declining interest rates, and particularly a declining spread, that makes it easier for France to continue to go out on the market and borrow money and do the things it needs to do to keep its budget rolling over the years.
Alan, are there any more no-confidence motions to come? And is the Prime Minister's government in any danger of actually being toppled?
So there is at least, or very likely to be, at least a couple more no-confidence votes to come. As the minister said, the budget now has to go to the Senate. It'll then come back for one last reading in the National Assembly. They'll pass it again through this process called 49.3, which is this process where they don't actually have a vote on it. That will then spur another couple of no-confidence motions, probably. Again, it depends. It's the far left and the far right that have been filing these motions. They will probably file more, and these motions will almost certainly fail again, as they did yesterday and one from about a week earlier, because everyone's really tired of the political instability. And even speaking with both politicians from the far-right National Rally and the far-left France Unbowed over the last week, speaking to some of these parliamentarians, they've all said they don't expect any of these motions to pass. Le Cornu is probably safe until the next presidential election, really, so into 2027. So it looks like, for the moment, that it really is going to be sort of political stability in France as people gear up really for this big presidential election, which is coming in about 14 months' time.
Alan, are there any other factors that could impact, have an impact on French assets that investors should be looking out for?
There are a few, actually. So one is the municipal elections. They're coming up in March. And again, in and of themselves, they're not super important, particularly not for foreign investors, but even for domestic investors, unless there's a really big trend that comes out of these municipal elections. Say, for example, the National Rally really runs the table, wins some very big cities like Marseille that they've never won before. That might show a trend heading into next year's presidential election. The other thing that they should really watch out for is a decision. Right now, there's an appeals process going on. Marine Le Pen is barred from running in 2027 for the National Rally. She's appealed this ban, and the decision on that is going to come probably in May or June from the appeals court, and that's going to have some impact on the popularity of that party. Now, that said, polling has shown sort of whether it's her or her deputy, Jordan Bardella, it's roughly the same for the moment, but it still could have an impact at the end of the day.
Alan, thank you so much. Alan Katzer, Bloomberg's Paris bureau chief. Now, LVMH shares slumping this morning, the biggest decliner on the stock 600. This after organic sales in the company's fashion and leather goods division fell 3% over the holiday season. Well, joining us for more is Bloomberg opinion columnist Andrea Felstedt. Andrea, always great to speak to you, especially when we speak about luxury. But I mean, Bernard Arnault, the CEO, says that it's unlikely to be straightforward this year. Is it sticky because of some of the products that they sell, or is it just a wider luxury market?
I think it's the broader luxury market. So China isn't getting any worse, but some luxury companies said it's getting a bit better. LVMH said there was broadly no change. Chinese New Year is a couple of weeks later, so we're not going to get a read of China for a little while. The US has been doing very well, but it does compare with a year ago when we had this sort of big boom after the US election. There was like a mini luxury boom. It all came to an end in April, but the US is comparing against that. But the fundamentals for US luxury are pretty good as long as stock markets keep on their upward tear.
So what are the companies, Andrea, that have been a little bit more resilient? I know Richemont, that owns Cartier, has been doing pretty good. Is there anything else that we should be looking out for?
It's really jewellery that is doing very well. We've got all the new designers that are coming in at the moment.
And there's loads of them.
It's musical sewing machines. They've all arrived, and their products are coming into stores now. So we're not going to get the impact. There might have been a little impact in this quarter as consumers came in and said, oh, is Jonathan Anderson's product at Dior in yet? And they said, oh, no, but, look at this handbag instead. So they might, but the real impact, it could be like another year before we really understand who's working. And inevitably, some of them aren't going to work. So that's a little bit more uncertainty.
Who are you most excited about?
Michael Ryder at Celine, that's my top. I really like what he's doing. Came from Ralph Lauren. His clothes are very wearable. Obviously, got lots of excitement about Jonathan Anderson. But for me, Celine is the one to watch.
Oh, so exciting. Thank you so much, Bloomberg opinion columnist Andrea Felstedt. Now, coming up, the UK Prime Minister is expected to arrive in Beijing very shortly. We'll discuss whether he can broaden trade ties with China without angering President Donald Trump. Yesterday, he was in a good mood. I think he was also wearing aviators to poke a little bit of fun at President Macron of France. We'll have a full roundup of what the China trip means, and then, of course, it's Fed Day. The Fed widely expected to hold interest rates steady this week after 3 consecutive cuts. Again, if you look at several Fed officials, they've signaled that rates are now in the right place to both shore up employment but also keep downward pressure on inflation. We'll have plenty more markets next, and this is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you're good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg. Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. The AI trade is rekindled after ASML smashes expectations, but the Dutch semiconductor equipment giant also says it will cut around 1,700 jobs. The dollar touches its lowest level since 2022 after President Trump suggested he's happy with the decline, saying the greenback is doing great. Plus, Chinese media say the British Prime Minister Keir Starmer has arrived in China for talks, including a meeting with President Xi Jinping. So there appears to be a growing concern among senior ECB officials about the strength of the euro with the dollar under pressure. In interviews with Bloomberg and the FT, the Austrian Central Bank Governor Martin Kocher, who sits on the ECB's governing council, said continued euro appreciation will mean more subdued domestic inflation and could even prompt monetary policy reaction. Let's bring in our cross-asset strategist, Sven Ram. Sven, so good to speak to you. It's also Fed Day, so it's always exciting. First of all, talk us through the ECB concerns.
Morning, Francine. I think that the ECB is coming from a place where they think that, you know, overly appreciative euro will tighten financial conditions and will quell imported inflation. But that if it does that, then it is a problem for them insofar as they've put out the economic forecast, macroeconomic forecast, and they expect inflation to be bobbing above target, core inflation to be bobbing above target this year, slightly above target. But so they think that if the euro appreciates that much more, then that will bring down the inflation within that band, which means that it may necessitate a monetary policy reaction by probably having to lower rates further. I think that's Martin Kocher's concern, but I don't think we are yet at that level where it's going to be a problem, because last year Louis de Guindos pointed out that levels above 120 would be a problem. But I think it's a question of not just the level, but how far and how sustained the overvaluation is. But I think that the longer the euro stays stronger, it'll be a problem, but not at current levels.
And at the same time, President Trump has shrugged off questions about a weaker dollar value, but complained about China and Japan's currencies.
Yeah, absolutely. I mean, it all looks like, Francine, a beggar thy neighbor monetary policy, because the U.S. doesn't definitely want a stronger dollar from what Trump said last night. And the ECB officials' concerns also point to the fact that they don't want a stronger currency either. Well, there's news for currency traders, which is that all currencies can't be weak at the same time. For one currency to be strong, another has to be weaker. So I think that, the problem is which currency is going to absorb the weakness in the dollar and transform it as strength. I mean, the Japanese yen is roiled by fiscal concerns and about the BOJ lagging behind the policy curve, staying behind the policy curve. So it naturally falls on European currencies and the pound and the euro mainly to absorb that dollar weakness. So it's going to be an interesting tussle, the beggar thy neighbor monetary policy. Well, let's see how it plays out.
Ven, thank you so much. Bloomberg cross-asset strategist Ven Ram. Now, Robert Kaplan, the Goldman Sachs vice chair and former Dallas Fed president, says he expects the Fed to hold rates at neutral until it sees clear signs of inflation improving. Well, Bloomberg's Stephen Engel began by asking Rob Kaplan when he expects a move on U.S. rates.
Right now is at neutral. What do I mean neutral? We're at 3.5, 3 3/4. The neutral rate is, I think, 3/4 to 1% real, and then another, add the inflation rate, 2 3/4. With inflation still running at 2 3/4 and the expectations of stronger GDP growth, i.e., which may help the job market, I don't think they want to move until they see demonstrable evidence that inflation is improving. If they see that this year, they'll move, but they don't want to act until they see it.
Is there disunity, though, among Fed participants? That was the concern. I talked to Patrick Harker, the former Philadelphia Fed president, who essentially said this causes problems. He was quite surprised in the last rate decision in December by that disunity.
I don't think I think there's debate and disagreement, and I think that's a good thing. And here's why. When we were at 4, 4 1/4, 4 1/4, 4 1/2, it was easier to go along with cuts to buy labor insurance because we were still the Fed was still restrictive. The reason the tensions got higher is once you're getting to neutral, I think a good part of the group said, I don't want to be at neutral with inflation sticky and, by the way, above target for the last 4 or 5 years. I think you'll see now that they bought the insurance, I think you'll see a pretty good consensus among the group. We don't want to act until we see improvement.
And your views again on Fed independence? Obviously, there's been lots of ramping up of rhetoric coming, whether it's from the DOJ and having the subpoena. Jay Powell stood strong. Of course, he's going to be handing off his position. He could stay on as governor, though. How do you think this plays out?
So let's take it in pieces. In December, a lot of people may not have paid attention to this. The governors voted unanimously to extend the term of all the bank presidents, other than Raphael Bostic, who's retiring. That might have surprised people. Unanimous vote, by the way. Okay, so I think there's more likelihood there'll be stability among the presidents. Then, if the Supreme Court does not allow action on Lisa Cook, you've got 4 seats with Jay Powell's the one that's up for grabs. I think he's likely, I would have thought, not to stay on. And so there'll be 4 seats with the new chair. It means the new chair will push regulatory reform, may have more collaboration with the Treasury on the balance sheet, but on the Fed funds rate, he's not going to have 7 votes wired. He's going to have to persuade, debate, disagree. I think that's a good thing. He'll argue that the Fed should anticipate inflation improvement. The committee will want to see it, and that'll be the debate.
How do you read what's happening in Japan? Obviously, the yen is a beneficiary of the weaker dollar. It's at 152 and change right now. So there was a lot of chatter about intervention when it approached 160. There's, fiscal challenges, obviously, and fiscal stimulus being proposed by the prime minister, but there's been a bond market rout and a lot of turmoil. How do you see this dovetailing with what's happening with the dollar?
So here's the dilemma for Japan, and this is true of a lot of the developed world. Aging population, in Japan's case, shrinking workforce growth because of aging, and very high leverage. And so there isn't at this stage as much capacity or market willingness to go along with more fiscal stimulus. On the other hand, there's things that the central bank would normally do to protect the currency, i.e. raise rates. And I think talking about excess fiscal has sort of had an effect in the market. So I think you'll see that calm, and it will probably need a combination of some fiscal action and probably the central bank taking some action to protect the currency. But I think in between now and the election, I think they just want to calm this.
The New York Fed did a rate check at the behest, perhaps, of Treasury to sort of send a signal to the market that there could be coordinated intervention.
So obviously, I've seen the same reports. I think it's in the U.S.'s interest that you don't see the back end of the Japanese bond curve move up, because it will affect the back end of the U.S. Treasury curve. And so I think some rhetorical intervention, at least, doesn't surprise me, because I think it's in all of our interest to see stability.
Well, that was the Goldman Sachs Vice Chair and former Dallas Fed President Rob Kaplan. Now, the UK Prime Minister is being accompanied by some of the country's biggest banks and businesses on his visit to China. Keir Starmer seems confident that he can do what few leaders have shown the political dexterity to pull off, broaden trade ties with China without raising the ire of President Trump. Well, let's bring in Francesca Giretti, China Initiative Director at RAND Europe, and Bloomberg opinion columnist Rosa Prince. So thank you both for joining us. I mean, this comes on the back of a very fractious Davos, where we heard new trade threats, where it was very clear that Canada also saw their new relationship with China as something that would get them away from the U.S. Francesca, does Keir Starmer need to choose? I mean, he's at pains in saying we don't need to choose between the U.S. and China, but effectively, does he?
No, I don't think at this stage it does. And it's very interesting that the Chinese themselves are trying to make very clear that whatever move of reapproachment or approachment towards China is not a move against the U.S. They made this clear with Canada as well, if we have to be honest. So I don't think he has to choose, but of course he needs to balance what will be a closer economic relationship with the security concerns that the U.S. and the U.K. will have.
Yeah, I mean, does it make them closer, Rosa, I guess? If you're dealing through so much pressure in the U.S. as the Prime Minister of the U.K., do you want a bigger, better and faster deal?
Yeah, I mean, look, if there's a choice between China and the US, the UK is always going to cleave towards the US. But I think Keir Starmer definitely sees opportunities there in China. As he said, he doesn't feel he needs to choose between the two. Starmer traditionally has had a pretty good relationship with Trump. Trump is unpredictable, so who knows? But I think he thinks that he can kind of finesse that. And we're not talking about huge numbers. I think these are deals that he hopes will help the UK economy, but it's not really going to upset Donald Trump too much, I think.
Rosa, but politically, does Keir Starmer need to seem strong just to send the message to the citizens that he's getting stuff done?
Yeah, I think that's right. I mean, on the one hand, he quite likes getting out of the country. This is kind of his happy place. He's had so much pressure domestically. But there are also pressures over China. So the Conservative opposition, for example, have accused him of kowtowing to China. There are those threats to national security. I mean, just this week we heard that the Chinese, the extent of their surveillance in the UK has extended to Number 10 itself, and that they were bugging former prime ministers and their aides. So it's not a risk-free trip, but I think he hopes and he believes that he can kind of somehow manage to go along that tightrope and come away with some wins financially, which, as you say, he desperately needs to boost the UK economy, which is not really going that well at the moment.
Yeah, or at least to be seen, actually, as shoring it up. Francesca, what's your take on China right now? So, there's a lot of talk about, given the redrawing of the New World Order, that actually President Xi is the big winner. At the same time, the U.S., by touching Venezuela and Iran, just put their oil, a lot more expensive and hard to get hold of.
So China's priority number one is its internal stability and economic growth, right? And that has always been the case and remains the case. What is interesting about 2026, I think, is that China's priority number two is stabilization in the relationship with the United States. And that is why you see, even though the Ministry of Commerce has announced, trade and investment deals for Keir Starmer, which is quite a one-off compared to how previous visits with European leaders went, at the same time, it is making sure that this doesn't appear as a visit to which is against the United States. So priority number two for 2026 is going to be to stabilize the relationship with the United States while keep diversifying his relationship and his exit markets for his exports.
What's the right way of stabilizing the relationship with the U.S.? Because they do seem to have, a much better relationship, but this was also after China escalated. So it was talking tough and showing that China had teeth.
That is definitely one part of the story, and they've used it very well in 2025. I'm not quite sure whether they believe they'll have to use it in 2026 as well. It seems there will be a lot of diplomacy, talks. Washington's position has also changed towards Beijing, and they really see Donald Trump as trying to build towards this April visit with Xi Jinping. So I do expect a lot more. I mean, it's going to be a little bit of a roller coaster as always, but it seems that the expectation from Beijing perspective is that things will stabilize at least for the first half of 2026, provided no unexpected events happen.
And Rosa, are we expecting the Prime Minister to bring up tricky subjects like national security and human rights forcefully?
Forcefully is the key word there. I think that he will have to mention, for example, the human rights activist Jimmy Lai, who is currently imprisoned in Hong Kong. There was an interesting intervention yesterday by the former Chancellor Jeremy Hunt, the Conservative, saying, you know, things can get a little frosty if you try and push these subjects too much. So I think he will bring it up. How far he is in a position of strength, able to really kind of tick off his hosts, I think is unlikely.
Is it going to be different what we see, you know, playing out in front of the media and behind closed doors? I was always led to believe that actually, as long as you outside treat the Chinese with a lot of respect, then you can push a little harder in one-to-one meetings.
Yes, I think that's right. And also there is no joint press conference, so in that sense they are shielded from the media and those tricky questions.
How much internal pressure does President Xi have?
In this moment, quite a bit, to be honest. The economy is doing well, but there are some structural issues that haven't been solved. The real estate crisis that we've had is still looming on the economy. We've had some good data, but not particularly exciting data. And the forecast is that they're going to have a projection of growth for 2026, which is going to be lower, around 4.5, maybe 5, but it's still quite stable. So there's quite a bit of pressure internally. And you see that also in the purge that, you know, Xi Jinping has been doing in the military leadership as well.
I mean, I don't know whether the template or the blueprint for some kind of agreement is what Canada had, because that was just a couple of weeks ago. I mean, again, my understanding was that actually President Trump, you know, then gave it kind of his blessing. And then last week in Davos, it was a little bit trickier. But is that what the UK could aim to achieve with China?
I think so. I think, you know, the positive statement from the Ministry of Commerce that came yesterday really shows that China is willing to sign something with the United Kingdom. So I do think that is sort of the blueprint, although I would expect, I'm not sure which will be the sectors that will be involved, whether, for example, electric vehicles will be one of these, because the UK hasn't really imposed any tariffs. So I don't expect that to be necessarily on the lineup.
Yeah, do you have an idea of what, I mean, I guess, what are the sectors that could benefit from this visit?
Yeah, absolutely. EV cars, but also lots of renewables. Wind is one area of sort of shared interest, although there has been a project pause just today, I think, amid concern, you know, about national infrastructure. Does Britain want to have China having too much influence there, too much ability to disrupt Britain's infrastructure? And even academia and the arts. There's a representative from the Royal Shakespeare Company along for the ride. So, yeah, really broad range. And, of course, financial services is another area where Britain's been particularly strong, and I think China will be interested in getting involved.
I mean, it was only last week that the UK actually, you know, approved China's plan for a massive embassy in London, but that wasn't without controversy.
Yeah, again, lots of controversy. It's a huge site. It's a site of historic interest right across the street from the Tower of London. Many people saying, what are we doing? Will there be secret rooms? Will there be risk even of dissidents living in London being taken there and mistreated? I think Keir Starmer's view and the view of the security services was that if those things were to happen, they could happen with or without this embassy. And I think the quid pro quo is that Britain also wants to do a big renovation job on its embassy in Beijing, so Keir Starmer will be hoping that that too gets the green light.
And Francesca, do we know in terms of priority for President Xi and China, so they have Canada, the UK, where's Europe in this? And it does feel like a lot of times it's, you know, individual countries in Europe that are going one by one. Emmanuel Macron quite close to them instead of the EU as a whole.
So they do that for sure, but then you have the European summit. We remember last year EU-China summit didn't go particularly well, so EU leaders also go as a EU union. Obviously, the difference is that when European leaders, in terms of member states leaders, go, they try to strike some sort of deal, exactly, usually economic. Recently they failed, but Merz is going very soon, while usually the European Union pushes a more assertive agenda. We have to say that, however, this this period in particular is a bit of tension. You know, the tariffs issue was somewhat solved at the beginning of the year, but then just a few weeks later, the EU announced the Cybersecurity Act, which puts, again, Chinese company under the spotlight and under pressure from the EU.
Thank you both for joining us. Francesca Ghiretti, China Initiative Director at Round Europe, and Rosa Prince from Bloomberg Opinion. Coming up, as we await Tesla earnings, Elon Musk looks to planetary alignment for the SpaceX share offering. We'll bring you the details on both stories next, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the AI trade has received a big vote of confidence from ASML after the Dutch semiconductor equipment maker reported record bookings for the fourth quarter and a new share buyback program. Earlier, the company's chief executive spoke to Bloomberg's Tom McKenzie, who joins us now. So, Tom, thank you for joining us. What are the key takeaways on earnings that the chief executive expanded on?
Yeah, absolutely. So, look, again, to your point, a record quarter in the fourth quarter. The numbers coming in terms of the sales numbers in that quarter, double the estimates. So close to $16 billion US just in the fourth quarter. Again, close to double what had been estimated. There's a share buyback that's been announced. There's some job cuts that are being announced as well. But the key part of this story, I think, is what they're seeing in terms of sustainability of the AI capex spend, because of course this company benefits from the spend coming through from the hyperscalers. That means there's increased capex from the likes of TSMC, the foundries who actually churn out these chips, and ASML CEO telling us he does see, at least in the short to medium term, more sustainability on that front. He's got growing confidence in the AI theme, and ASML are profiting from that. And for now, there's no signs that's going to slow down. There's the upstream, there's the downstream. This is the upstream part of the business when it comes to AI. The downstream is the software, and we're going to get some examples of that with Mag 7 reporting later today.
So they're also cutting 1,700 jobs, but this is because it's deemed too bureaucratic or too complex. It doesn't really go to the heart of what they do, right?
Yeah, so both the CFO and the CEO have been talking about this. They said that they've had feedback internally and from their own customers. They need a company that can react more quickly, that is more agile, to your point. So they are trimming headcount by 1,700 positions, largely in the Netherlands and in the US. That's about 4% of their workforce. Just going back to the earnings and the outlooks, they've raised their guidance, their forward guidance, to the top end of about 39 billion euros by the end of this year. JP Morgan says they could actually beat that. 2027, according to JP Morgan analysts, looking very healthy for ASML. And they said, and I'm quoting from their reaction, JP Morgan, they're saying there is almost nothing to dislike in the orders or the guidance for ASML.
Tom, thank you so much. Tom McKenzie there, Bloomberg's opening trade anchor. Now, Tesla earnings earnings out later today. Investors likely to be looking for signs of progress in the AI and humanoid robot program that the chief executive Elon Musk has said represents the company's future. Let's bring in Craig Trudell, Bloomberg's global autos editor. Craig, first of all, I'm so excited to speak to you. SpaceX, I mean, are they still targeting like a mid-June IPO? Is this a big talk of the town?
Fascinating news this morning from the FT. The timing, the reason for that timing or that targeted timing is some planets apparently align in June, and you know Elon Musk is quite fond of puns. You know, the planets aligning for an IPO is just screaming out for a badumts. And so expect him to make that joke in a matter of time. But yes, with Tesla, things are a little bit less cheerful. I think this is a company that is seeing sales moving in the wrong direction. Its core business not doing well. And as you mentioned, Elon Musk wants to talk about everything but that. He wants to talk about the robots and the robo-taxis that are this company's future, or at least that's the plan.
Craig, I mean, so I was in the room in Davos when he spoke. I mean, it was really incredible because this was after Vladimir Zelensky talking about war and trade and allies, and he was looking at the stars. It was like, we're going to put data centers on Mars and things like that. I mean, is his focus now firmly on space away from Tesla? Is this why you have a kind of double standard?
I think it's interesting. You know, he does spend so much time talking about space, spend so much time on X, sort of fighting the culture wars that it almost can feel at times like Tesla is sort of his forgotten company, and yet it is still the source of so much of his wealth and is so important in the auto industry, much as they have been having issues for the last couple of years. You can't sort of, take issue with this notion that they have, very much command of the narrative of this industry and where things are going.
I mean, again, when it comes to trade and all of that, do we know how Tesla sales are going in the U.S.? If Canada now has a trade deal with China and importing EVs to North America, does it impact Tesla?
It could actually be a positive for Tesla in the fact that in the past they have relied on China for some imports into Canada of cheaper versions of the Model 3. So there's a sort of precedent for them to take advantage of this new flexibility. It's unclear whether they will take advantage of that, and I think there's some risk there in that the Trump administration clearly, has decided it's not fond of Carney's trade deal with China, and so if you try and take advantage of that, do you risk getting sort of crossed with the Trump administration, which Musk has had his ups and downs with them as well.
So Craig, in Davos, we tried to doorstep Elon Musk. He went through many lengths to avoid the press. He even walked into he even walked into a kitchen, actually a working kitchen, to get away from us. Are you expecting him to be more media friendly as the IPO date gets nearer?
I mean, I think just going off of a few months ago when he was getting his, $1 trillion pay package, suddenly, at least he and I would say Tesla's board were very much out front and out in the open talking with the media that, Musk has sort of been scornful of the last few years. So maybe that will change when he wants to get his story out about this company coming public finally.
It's an open invitation, 9 a.m. He can come anytime. Craig, thank you so much. Craig Trudell there, our global auto czar, now with the side dish, I would say, of SpaceX. This is a picture for markets. It's all about the tech trade actually being revived by ASML. The other big story is, of course, the Fed that we'll watch very closely today. Look, tech stocks are driving equities higher for a second day. Investors really looking ahead to the mega cap earnings, but then look out for the Fed's interest rate decision. Investors expect the Fed pretty much to remain on hold and price in about 225 basis point cuts for 2026. Up next, it's Bloomberg Brief, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. U.S. stocks hitting record highs ahead of big tech earnings. ASML results giving an early boost to the market on AI demand. The dollar just stabilizing a bit now after its worst performance in 4 years. President Trump brushing off sell-off woes, fueling speculation of a longer-term decline. And it is Fed Day. Chair Powell sure to get questions about the future of the Fed as traders price in a more dovish policy shift under new leadership. So let's take a look at these markets. I'm smiling because we are in the green. We've had 2 straight days of gains, and then ASML orders came in, just blew things out of the water. It is the last time we'll get the quarterly orders from ASML, but it's certainly giving the AI trade a boost here. Yesterday, the Nasdaq 100 was up almost 0.9%. It looks like it's headed in that direction again. There is always the possibility that the Federal Reserve derails all of this, of course. Let's take a look at the bond universe. It's not likely to happen. None of the economists in our survey are looking for any change in rates. Paul Donovan of UBS this morning, though, saying there could be the possibility of an insurance cut just to give people the sense that they shouldn't be afraid of unemployment, for example, and that they can still dip into their savings in order to pay for those tariffs. But he doesn't really expect one this time either. So as you can see, no change at the back end, and we are actually a little lower at the front end, 357 now, but really unchanged. Let's take a look at precious metals and so on, because we have gold soaring above $5,200 an ounce again today. We've almost met the Goldman Sachs year-end target of $5,400. We're very close to $5,300 on gold. Nat gas coming off a little bit. We'll be very much watching the dollar. It's rebounding ever so slightly as an index, up about 0.2%, but it weakened yesterday after Donald Trump's comments by more than 1% against a basket of currencies almost instantly. It was something to see. All right, let's get to some individual market movers now this Fed Day. Over to London and Chloe Melly.
Good morning, Bonnie. Texas Instruments is up more than 7% this morning after a surprisingly positive outlook from the company. This will be taken as a sign that industrial and automotive customers are increasingly buying again, investing again after clearing off inventory. And given that Texas Instruments is often seen as a barometer for the health of the wider economy, this points quite positively. Moving on to Seagate, which is also in the green today in pre-market trading after reporting earnings ahead of expectations and issuing quite an upbeat outlook outlook, and that was thanks to strong demand for data center equipment. This is part of that broader rally and momentum in memory and storage stocks, and we are up more than 10%. And finally, it's a busy earnings day today, so let's look at the slate of today. We are mostly green across the screen there for Microsoft, Tesla, and Lam Research, and Meta Platforms a little bit weaker ahead of those earnings. Lam benefiting probably as well from those great ASML numbers that we got out of Amsterdam today.
Yeah, for sure. And it is the busiest day for S&P earnings, Chloe. You have almost $9 trillion of market cap reporting today. That's Chloe Melee there in London. And coming up in this hour, we're going to count you down to the Fed with Andrew Hollenhorst of Citi. Tech driving stocks higher than ahead of big earnings. ASML kicking things off with orders hitting a record on AI demand.
The last 3 months have brought a lot of clarity. And I think what you see basically is that the semi industry, our customers, start to believe that this AI demand is sustainable. And therefore, they have moved into building capacity, and they are moving very aggressively. And I think this has been very nicely translated indeed into a record booking number. So that's, of course, very good news for the midterm.
Joining us now from Amsterdam is Bloomberg's Charlotte Hughes Morgan. So, Charlotte, what are your takeaways from the earnings? Just give us the big picture first off.
Thanks, Bonnie. I mean, as you said, absolute record quarter for ASML. So that bookings number, which has been the closely watched metric up to this point, 13.2 billion euros, absolutely surpassing any of the expectations we saw coming into this quarter. And what's behind that? Well, you heard the CEO there mention it. It's the unabated demand for artificial intelligence. So let's remember, ASML is the only company that is capable of producing the cutting-edge lithography machines that make the most sophisticated chips that power artificial intelligence applications. So what the CEO is saying is the last few months, our customers, and those are the all the major chip makers, TSMC, Samsung, Intel, they have become much more positive about the medium-term market perspective on artificial intelligence. I mean, if you look over the last few months, year, we've seen billions of dollars pouring into data centers and other artificial intelligence infrastructure. That prompts chip makers to ramp up their capacity. So they're really doubling down and investing in CapEx and spending a lot more, and that translates into really strong orders for ASML. And they've said they expect this to grow. They expect AI demand estimates that we had already.
Well, this is about the most transparency we'll have anymore from ASML, because as we've been saying, we don't get those quarterly numbers anymore. What we do know is that there's layoffs coming. So 1,700 jobs, about 4% of the workforce. Does that portend anything a little worrying, given that, it wouldn't seem like a time when ASML would need to lay off workers?
Well, it's interesting, yes. As you said, at 8:30 this morning at CET, ASML released a statement saying that they plan to cut those 1,700 jobs. And the market doesn't seem to be too spooked by this. And I think the explanation that ASML has given is that these job cuts, which will mainly take place in the Netherlands, also a few in the US, are mainly happening at the management level. And the aim is to be more efficient, so to streamline their technology and their IT divisions and let engineers be engineers, so to speak. So it seems to be that they are trimming some of the kind of more managerial layers rather than making kind of big cuts to the way they carry out their kind of engineering processes.
All right, Charlotte, thank you so much. That is Charlotte Hughes Morgan in Amsterdam, covering ASML, the bellwether for the AI trade and the quarter. Meanwhile, the dollar stabilizing after its biggest drop since April on the back of President Trump saying he's not concerned about a weaker dollar. For more, Bloomberg's Ven Ram joins us now. Then, should he be given that as soon as he made that comment, the dollar index moved 1.2%. We saw stronger sterling, stronger euro, stronger yen, all off the back of that one comment.
Absolutely, Bonnie. I think that, it's clear what the U.S. policy administration wants here. They want strong U.S. stocks. They want treasuries to be steady. but they do want a weaker currency. They want a weaker currency to close the deficits. They want a weaker currency to boost exports. But it's not as simple a prescription as Trump would have it, because over on the other side of the Atlantic, we heard from the ECB this morning, and they are saying that, look, if the euro continues to appreciate, it's going to pose a headache for them, because that will mean that imported inflation into Europe is somewhat subdued relative to their projections. And what that implies is that they will have to lower the policy rate further. So, you've got the ECB, which doesn't want a strong currency. You've got the US policy administration, which doesn't want a stronger dollar. So who is going to inherit a weak currency? Nobody. Who is going to inherit a strong currency? I beg your pardon. So I think that, this is all going to be like a currency war over the next 6 months. We already know what's happening with the yen and the yuan. So it's going to be a heady mix for the currency markets in the next 6 months, Moni.
Speaking of currency markets, slightly obliquely, but gold almost hitting a record. I mean, it is hitting a record, but almost hitting $5,300. And we're hearing that Tether, weirdly enough, is amassing a stockpile of gold bullion as well. Should we see that as the reverse, the mirror image of the dollar trade, or is something else then?
Well, gold has got its own momentum, and I think that the weakness in the dollar is going to feed into it. Because I think that, with Trump's comments, it's clear that how the policy administration views the currency, and therefore the currency markets are likely to hedge against corporates are likely to hedge their dollar exposure. That means that, dollar is likely to be on the back foot here for the next 3 months, at least a quarter or so. And I think that, that in turn means that the gold is going to continue to find the momentum that it already has. So it's going to be a pretty uncomfortable scenario for many people with a weaker dollar and a stronger gold.
Ven, you've been pointing out something interesting, which is that given how quote-unquote overvalued, I guess it's one word for it, US stocks are, and stocks around the world in many ways, that there's one market where, you might see relative value, the cleanest dirty shirt in the room, if you like, and it's not the US anymore, it's actually the United Kingdom. Explain your thinking.
Absolutely. I mean, people don't associate UK stocks with excitement, at least as much as they do with the US stocks. But that's missing the point. The point is that, UK stocks, if you look at the past 25 years, Bonnie, they've returned in terms of earnings growth, they've returned as much as more than 8% compounded annual, which is not trailing too far behind the US. And also, if you look at the earnings yield, you're getting about a 6% earnings yield on UK stocks. That's the highest of any developed market that you can think of. And I ran a valuation exercise looking at UK stocks as long duration bonds. And what that shows is that the fair value of FTSE 100 is 11,400. So we are more than 1,000 points lower than that. So this is a market that is cheap, that is undervalued, and it doesn't have any AI exposure. That is actually an advantage, because when the investors think that they've had too much of the AI exposure and they're looking to hedge those returns away from AI exposure, what is the market that offers that non-AI exposure but steady growth in earnings? That's UK.
All right, we're going to be keeping an eye on the FTSE, just looking up to see how well it's performed so far this year, and it looks like it's higher as well, but not by as much as some stock markets. So the FTSE up 2.5% this year versus about 2% for the Nasdaq 100. We'll keep an eye on that throughout the year. Ven, thank you so much, Ven Ram there. Now to other top stories trending on the terminal this morning. SoftBank is in talks to invest as much as $30 billion more in Sam Altman's OpenAI. The Japanese company, already one of the ChatGPT maker's biggest backers. Sources say the discussions are fluid and the amount of funding could change. Amazon employees learning of a new round of layoffs in an email apparently sent by mistake. The email from one of its senior VPs scheduled a meeting for Wednesday morning that has since been cancelled. The message referred to another message from HR about employees in the US, Canada and Costa Rica having been laid off. That other email does not appear to have been sent. Amazon has not responded to requests for comment. And LVMH sees a poor Christmas. Shares are sinking, the most since April, after it reported a wider than expected drop in fashion and leather goods organic sales for the fourth quarter. CEO Bernard Arnault said 2026 is unlikely to be straightforward and that LVMH would limit spending this year. Coming up, UK Prime Minister Keir Starmer touches down in Beijing. That's next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. Today, the Fed decides.
It really feels like the door is closing for another interest rate cut.
The economy is actually still in decent shape.
The market is betting the Federal Reserve retains its independence.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How does Fed Chair Jay Powell position himself as being politically independent?
You don't plan on Donald Trump's economic vision.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Bloomberg Brief, I'm Bonnie Quinn in New York. UK Prime Minister Keir Starmer has landed in Beijing in the hopes of broadening ties with China while avoiding a flare-up with the United States. Joining us now is Bloomberg opinion columnist Rosa Prince. Rosa, what do we expect from Starmer's trip to Beijing?
Well, Keir Starmer has brought a big delegation with him, lots of banks, lots of other big businesses, and also some cultural institutions. He's got the Royal Shakespeare Company along. And what is going on here in Britain is that the government is being criticised for low cost of living, poor growth, and he's hoping that if he can forge some deeper links with China, then he could do something about that.
He has to be very careful. He has to walk a tightrope, right? He doesn't want to rile President Trump. How does he do that?
There are lots of advantages to going to China, but there are also a lot of pitfalls. One of them, as you say, is the attitude of Donald Trump. Now, Trump was unhappy, obviously, at Mark Carney, the Canadian Prime Minister's trip to Beijing recently. I think he probably sees Starmer slightly differently. Obviously, it's not a close neighbour as Canada is, and he has a pretty good relationship with Keir Starmer. The numbers also are not huge. Domestically, there is also pressure on the Prime Minister here. There is criticism that China could get too involved in Britain's national infrastructure, that's a security risk, and also about the surveillance culture in Beijing. For example, the Prime Minister is bringing a burner phone with him and a completely blank laptop so that the Chinese cannot hack into his tech.
Right, I'm sure that will help substantially. Rosa, what could he come home with that would satisfy a domestic audience? I mean, he's obviously under pressure at home as well. He's gotten rid of the Andy Burnham threat for now, but that leaves other threats out there. He needs to come back with maybe some kind of trade deal, perhaps, or what would work?
I think he would like some trade deals. He'd also like to address that balance deficit that they have. China sends in a lot and doesn't take a great deal. I think some action on that would be very welcome. But again, there are risks. There is jeopardy here because what he doesn't want to do is flood the UK market with cheap Chinese imports. He doesn't want to risk putting too much Chinese tech into the national infrastructure. For example, he has actually just paused work on a wind farm here in the UK amid concerns about that. I think perhaps the biggest potential will be on EV, on those electric cars that are seen as a real growth area in the UK, and also on renewables, wind tech in particular. That's another area, of course, where he might offend the president, who has set himself in his Davos speech. He spoke very bluntly about how he doesn't think that this tech is real. So he has to be careful, but this is his happy place. He quite likes being on the international stage as opposed to back here in Westminster, where he's under so much pressure for his own leadership.
That's for sure, and we'll see if Xi Jinping wants anything from him as well in return. Rosa, thank you so much for joining. That is Rosa Prince of Bloomberg Opinion. Coming up, SpaceX weighing a June IPO. More on that, and a look at what else is making headlines in your front page news next. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bloomberg Brief, I'm Bonnie Quinn in New York. The first Fed decision of the year coming later today. Take a listen to Goldman Sachs Vice Chairman and former Dallas Fed President Robert Kaplan, looking ahead with Bloomberg's Stephen Engel.
Right now is at neutral. What do I mean neutral? We're at 3.5, 3 3/4. The neutral rate is, I think, 3/4 to 1% real, and then another, add the inflation rate, 2 3/4. with inflation still running at 2 3/4 and the expectations of stronger GDP growth, i.e., which may help the job market, I don't think they want to move until they see demonstrable evidence that inflation is improving. If they see that this year, they'll move, but they don't want to act until they see it.
Is there disunity, though, among Fed participants? That was the concern. I talked to Patrick Harker, the former Philadelphia Fed president, who essentially said this causes problems. He was quite surprised in the last rate decision in December by that disunity.
I don't think I think there's debate and disagreement, and I think that's a good thing. And here's why. When we were at 4, 4 1/4, 4 1/4, 4 1/2, it was easier to go along with cuts to buy labor insurance because we were still the Fed was still restrictive. The reason the tensions got higher is once you're getting to neutral, I think a good part of the group said, I don't want to be at neutral with inflation sticky and, oh, by the way, above target for the last 4 or 5 years. I think you'll see now that they bought the insurance, I think you'll see a pretty good consensus among the group. We don't want to act until we see improvement.
And your views again on Fed independence? Obviously, there's been lots of ramping up of rhetoric coming, whether it's from the DOJ and having the subpoena. Jay Powell stood strong. Of course, he's going to be handing off his position. He could stay on as governor, though. How do you think this plays out?
So let's take it in pieces. In December, a lot of people may not have paid attention to this. The governors voted unanimously to extend the term of all the bank presidents, other than Raphael Bostic, who's retiring. That might have surprised people. Unanimous vote, by the way. Okay, so I think there's more likelihood there'll be stability among the presidents. Then, if the Supreme Court does not allow action on Lisa Cook, you've got 4 seats with Jay Powell's the one that's up for grabs. I think he's likely, I would have thought, not to stay on. And so there'll be 4 seats with the new chair. It means the new chair will push regulatory reform, may have more collaboration with the Treasury on the balance sheet, but on the Fed funds rate, he's not going to have 7 votes wired. He's going to have to persuade, debate, disagree. I think that's a good thing. He'll argue that the Fed should anticipate inflation improvement. The committee will want to see it, and that'll be the debate.
Bloomberg's Stephen Engel with Goldman Sachs Vice Chairman and former Dallas Fed President Robert Kaplan there. Now it's time for your front page news. First up, the Financial Times reporting Elon Musk has proposed timing SpaceX's IPO to coincide with a rare planetary alignment and his birthday. The FT says the rocket maker is targeting mid-June, when Jupiter and Venus will appear very close together for the first time in more than 3 years. SpaceX is looking to raise as much as $50 billion at a valuation of roughly $1.5 trillion. Next up on the New York Times, Representative Ilhan Omar attacked at a town hall in Minneapolis. A man in the front row rushed at her and sprayed her with a substance that smelled strongly of vinegar. The 55-year-old assailant was removed by security and booked into jail on suspicion of assault. Hours before, President Trump had criticized Omar at a rally in Iowa. And finally, the Washington Post is reporting an initial government review reveals 2 federal agents fired at Alex Pretty during Saturday's fatal shooting in Minneapolis. The statement was sent to some members of Congress by the Department of Homeland Security and provides the first official timeline of the deadly encounter. It makes no mention of Pretty brandishing a weapon. And those are your front page stories. Coming up, Andrew Hollandhorst on the Fed. This is Bloomberg.
don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. U.S. stocks hitting records ahead of big tech earnings. ASML results giving an early boost to the market on AI demand. The dollar, at least stabilizing, if not strengthening, after its worst performance in 4 years. President Trump brushing off sell-off woes, fueling speculation for a longer-term decline. And it's Fed Day. Chair Powell sure to get questions about the future of the Fed as traders price in a more dovish policy shift under new leadership. So we are seeing futures pointed higher after ASML came out with record orders, just boosting that AI bull trade. S&P futures pointing to a third day of gains, same for the Nasdaq 100, which, by the way, was up almost 0.9% yesterday. Bonds-wise, nothing happening there. Obviously, no one is expecting the Fed to cut rates today. All economists in our survey say they'll stand pat. Now, I want to mention some breaking news. Amazon will cut 16,000 jobs. That just being confirmed right now. Amazon uploaded the letter that was sent out in error yesterday evening, and it's confirming it's cutting about 16,000 jobs. It says that most U.S. employees will have 90 days to look for a new role, and it will continue hiring and investing in strategic areas. Remember, an email went out yesterday notifying employees that there would be a meeting Wednesday morning, and the email was titled Project Dawn. It was sent out in error. There was no comment from Amazon, but now we are actually getting confirmation that Amazon is cutting 16,000 jobs. It's going to give U.S. employees, or most of them, 90 days to look for a new role. All right, let's get to some individual movers. Here's Chloe Melly in London.
Good morning, Vonnie. Texas Instruments is up very strongly this morning after a very encouraging forecast from the company. And this is a company that is considered to be a barometer for the health of the wider economy. And so this upbeat forecast indicates that some industrial and automotive customers are increasingly recovering. And so this is quite positive, and we are up more than 7% this morning. Moving on to Seagate, which is also in the green after reporting earnings ahead of expectations and also quite an upbeat outlook. And that is thanks to strong demand for data center tools, and this is part of this broader rally that we've seen in storage and memory stocks. And finally, it's a very busy earnings day today, and so let's see how some of those names are faring ahead of their results. We have got Meta a little bit weaker, but Microsoft, Tesla, and Lam Research all in the green this morning ahead of earnings. And Lam Research in particular is also benefiting from that read across from the ASML numbers, the very positive ASML numbers we got out of Amsterdam today.
Very positive indeed, absolutely sending bulls flying. Chloe Melly, thank you so much. The Fed then widely expected to hold rates this afternoon. Citi's Andrew Hollenhorst looking ahead to the rest of the year, writing, quote, the long-term trend continues to be toward gradually loosening labour markets and slowing inflation. And we continue to expect 75 basis points of further rate cuts this year in March, July and September. I'm pleased to say Andrew joins us now. He's chief economist at Citi and he's in studio. Have to start with this Amazon story because 16,000 jobs, we continue to get these layoff announcements. Obviously, each layoff announcement is idiosyncratic to that company, but you're obviously a little concerned about labour market weakening.
Yeah, that's exactly what we're trying to assess. You have these individual stories from firms. The question is, does this become an aggregate trend, a macroeconomic dynamic? And what we've seen is that this is a labour market that's been stable because firing has been low, layoffs have been low, hiring has also been low. That's always a little bit uncomfortable because if those layoffs do start to pick up, then the unemployment rate can rise very quickly. Now, that hasn't happened. We've been in this low hiring, low firing scenario for quite a while now. We had some of these layoff announcements back in October. We watch initial jobless claims, claims for unemployment insurance every week. Those haven't gone up. So there's no sign yet that we really have a macro trend towards higher layoffs. But I think every time we get an announcement like this, it reminds us to be mindful of that.
Well, and as Paul Donovan of UBS was pointing out today, it's not just the actual labour market, it's the perception of whether, I might be unemployed in the future and will that stop me from dipping into my savings to pay for those tariffs, as he says. So why not an insurance cut today from the Fed?
I think they will get to cuts, and I think to the point that was being made about people's perception of the labor market, you look at the survey data and you ask people, are jobs plentiful, are they hard to get? What we see is that over time, that number of individuals who see jobs as hard to get keeps increasing. So we're watching those kind of numbers, and whether it's right or wrong, whether that perception of the labor market is correct or not, if the perception is that the labor market is loosening, that does mean that people will adjust their consumption behavior. Now, you go back to the consumption data, that looks fine also, right? We've had strong retail sales. So these things aren't showing up yet, but I think they are all signs that policy rates are still probably modestly restrictive. Chair Powell today is going to tell us that they're in the range of neutral. But what he said back in December is maybe upper end of that range. So upper end of the range of neutral means that if we see any more concern in the labor market, the Fed will cut further.
Now, the market is pricing in around about 2 cuts this year. You see 3, the first one in March. If we're not going to get an insurance cut today, why would we get one in March, given that by then we won't even have had tax refunds really to speak of?
It really depends on what happens with the labor market data, and when exactly those cuts are delivered is just going to depend on that. So I think on inflation, we've had all kinds of distortions in the data because of the government shutdown. Hopefully we're not going to get another government shutdown and have more distortions. And that means that the Fed right now is really focused on the labor market story. The unemployment rate moved down to 4.4% in the last month's data for December. It looks relatively stable for the last few months. As long as the unemployment rate is stable, I think this is a Fed that will feel comfortable just holding rates steady. What we have in our forecast is that the unemployment rate will at least gradually move higher. That's not because layoffs pick up in our base case. It's just because we have this really slow pace of hiring. You look at the payrolls data, it's been a pretty tepid rate at which firms are adding new jobs. So that leads to a rise in the unemployment rate. That leads the Fed to cut. It all depends on that labor market data.
I have to ask you about President Trump's comments on the dollar and its weakness. Casual, almost throwaway, don't care if it goes down, it'll yo-yo around. Could he do some real damage? I mean, sure, it would be nice for exports to be more attractive, right? I'm sure that's what he's concentrating on. But what damage might it do to the real economy if it continues to weaken?
Whenever you get a weaker dollar, you worry about inflation picking up. Now, I think the good news is that the trend in inflation is towards softer inflation. The last couple months of goods inflation, where you would expect to see those dollar effects show up, has actually been softer in terms of goods inflation. So there's a positive trend or an encouraging trend for Fed officials as we're looking for inflation to get back towards 2%. The other thing that a weaker dollar does is it actually makes U.S. exports more competitive. So there's always kind of two sides to this. It depends, are you an importer, are you an exporter? Are you worried about inflation, are you worried about activity? On the activity side, there's actually a case to be made that this can boost export activity.
Sure, but if there's any volatility we've seen in the last few days, it's been in the currency space, what with the yen, tumbling, and then today, well, the dollar is stabilizing today, but in the last few hours, we saw that massive move. It was a 1.2% move. You can't just have those willy-nilly, can you?
Yeah, volatility is never a good thing for the economy. It's never a good thing for markets. I think that is something that we've had a number of policymakers comment on, and some of that volatility may be being driven by developments in the U.S. Some of that volatility being driven by developments outside the U.S. So I think that will stay a focus. It's encouraging to see things kind of stabilizing this morning.
Rick Rieder's odds have gone up to be the potential next Fed chair. Would he be somebody that would be more palatable to the bond market?
I'm not surprised to see his odds rising in some of the prediction markets. If you think about the comments that President Trump has made, he's talked a lot about wanting somebody like Treasury Secretary Bessent. Treasury Secretary Bessent has a background in finance, in financial markets. I think that has at times been encouraging and comforting for financial markets, that someone with that experience is in that role. Rick Rieder would be somebody like Bessent with that kind of background in financial markets.
And also potentially more of a consensus builder, a very affable person and so on. So that would play into the decision, no doubt, as well. That said, would it be without a doubt a more dovish Fed if it was Rick Rieder to be Fed chair?
Well, I think we've heard President Trump be very clear about his view on rates, and he was just talking about this yesterday and saying that he thinks that rates should be lower. If you look at the FOMC dot plot, the summary of economic projections, you actually have the median Fed official who thinks that rates should be lower. And so we're very likely to get a Fed chair who thinks that rates should be lower. So I think that is the direction of travel. Markets are going to try to tease out, exactly how dovish different Fed chair nominees are. As we've seen those odds move around, those probabilities move around, we actually haven't seen huge moves in the market. So the market isn't perceiving a huge difference between these various different potential Fed chair nominees.
Most important question for the Fed chair today?
Most important question for the Fed chair today, I think, is what would it take to get to that next rate cut? That's what the market's looking for.
I'm sure that'll be the very first question. Andrew, thank you so much for coming in to join us this Fed Day. Andrew Hollenhorst of Citi. Now to other top stories trending on the terminal this morning. A blowout quarter for ASML. Fourth quarter orders far exceeded analyst estimates, driven by demand for its most sophisticated chip-making equipment. Bookings were at a record $15.8 billion. ASML counts all the leading chip makers such as TSMC and Intel as customers. Tether Holdings has become one of the biggest players in the global gold market, with a hoard of around 140 tons of gold, worth about $24 billion. In an interview with Bloomberg, CEO Paolo Adrino said that they plan to keep plowing enormous profits into gold, while also beginning to compete with banks in trading the metal. And Apple CEO Tim Cook is the latest executive to weigh in on the killing of ICU nurse Alex Preddy by federal agents in Minneapolis. Cook called for calm, saying, quote, "This is a time for de-escalation and that America is strongest when everyone is treated with dignity and respect." In an internal memo, Cook added that he discussed the matter with President Trump earlier this week. Coming up, refocusing on the economy, President Trump rallies supporters in Iowa to bring his affordability push back into the spotlight. This is Bloomberg.
The world's second largest economy, with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've immune the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Movia. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Flutter Wave by empowering our customers across all our segments?
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I could create the greatest unemployment numbers or employment numbers ever. All I have to do is hire 3 million people and put them into the federal government, and you have 10 people, for one job.
President Trump looking to bring the focus back to his affordability push at a rally in Iowa. Let's head to Washington now with Kate Ackley of Bloomberg Government. So this has been ongoing for several weeks, but obviously if we have a partial shutdown, it's not going to look very good. Kate, what are the chances?
Right. Well, and when there is a partial shutdown, depending on which agencies and departments are affected, it has an impact on the economy. I talked with people yesterday, for example, who, represent the airline industry, and they're worried about, if TSA is operating again, people are operating without their paychecks. There are economic ripples that can come from this. And I know there are ongoing discussions on Capitol Hill and with the administration to try to avoid a partial government shutdown, this weekend. But these are some really thorny issues after the sort of tragic events over this past weekend.
Yeah, absolutely. And speaking of those tragic events, it does seem there's an about shift at the administration, but how much of an about face is there? How much de-escalation are we seeing?
Well, this is a real change in strategy, and nobody has been President Trump hasn't fired anybody, but he's moved his border czar, Tom Homan, to kind of be in charge of the situation now with in Minneapolis. And we saw yesterday, this is notable, on Capitol Hill, 2 Republican senators, Lisa Murkowski and Tom Tillis, saying, both Republicans saying that they thought that Homeland Security Secretary Kristi Noem should lose her position.
Yeah, Trump asked about that yesterday. He just said no, that she will not be stepping down. We'll see how things evolve. Meanwhile, Marco Rubio is saying the U.S. can use force to ensure cooperation on the part of Venezuela. Is Venezuela going to be back in the narrative next week?
Well, he's going to be on Capitol Hill. This will be the first time he'll be at the Senate Foreign Relations Committee. This will be the first time that senators will have the opportunity to grill him or ask him tough questions or try to learn more about the administration's plans in Venezuela, since that sort of New Year's, military action where they brought Maduro to the United States to face charges here. And, this is something that the big oil and everybody in the oil and gas industry that's kind of looking, some of them maybe skeptically about going in and putting down billions and billions of dollars to rebuild the country's, infrastructure, the oil and gas infrastructure there. They're going to be looking for clues. What does Secretary of State Rubio say? We expect that, Democrats, not surprisingly, are going to be offering the tough questions and, raising the biggest concerns. But, we'll also be looking for what do the Republicans on the committee say? What do they want to know? Yes. And, of course, Rubio will be in the spotlight. spotlight.
All right, Kate, we'll be keeping an eye out. Kate Ackley there of Bloomberg Government in Washington. Turning to tech, earnings expected from Microsoft, Meta, IBM and Tesla after the market close. It's the busiest day for earnings. We have $8.9 trillion in market cap set to report. Joining us now is Mandeep Singh of Bloomberg Intelligence. Well, we should be off to a great start after ASML orders blew away estimates, Mandeep. But what about the companies reporting today? Are there going to be any duds?
Well, I don't expect, Microsoft or Meta to be a dud. The real question is, how much is the market willing to kind of give a pass to Meta when it comes to their AI spend? And the reason I say that is everyone is painting a picture that AI assistance would be a big market, and Meta wants to compete in that with their super intelligence unit. But so far, they are the weakest when it comes to showing the monetization from their, AI spend. And that's where I feel I'm interested in seeing the market reaction. Microsoft, on the other hand, has been upfront in terms of showing the AI contribution to their Azure growth. And so from that perspective, I mean, given their OpenAI relationship is going to last at least for the next 5 years, they should be fine. And really, that cloud business, which grew 40%, should probably accelerate this quarter.
All right, yeah, Meta really has done nothing. If you look at its performance over the last 12 months, it's in line with market performance since the beginning of the year, but it's really gone nowhere. We'll see what happens with investors today. I want to ask you about the Amazon news, because we did indeed get confirmation that Amazon is cutting 16,000 jobs. An email that went out in error was actually uploaded today, and, Amazon says it's going to help its US employees with 90 days for finding other jobs and so on. But what does this mean? 16,000 seems to be a large figure.
It is, and look, revenue per employee will be a big metric for all these hyperscalers going forward. In the case of Amazon, I mean, they are still the largest public cloud provider. The question that investors will ask them is, how will they retrofit their existing, IT infrastructure to pivot towards AI? And that will be a big change, even though they have the cloud share. Like, there are a lot of neo clouds that are playing in the AI infrastructure right now. So I think they have to do that efficiently. They have their own chips, but clearly they are trailing when it comes to the likes of Google GPUs. And that's where I feel the streamlining of operations is probably the first step. But they have to protect their cloud share, because clearly there is more competition on the AI infrastructure side.
Yeah, and I do want to point out these 16,000 positions are corporate employees, so it's obviously changing the bureaucracy of Amazon to some extent. Now, when it comes to AI, SoftBank is going to invest even more now in OpenAI, another $30 billion. Is Masayoshi Son getting carried away, or is he doing something with a lot of foresight, Mandeep?
I mean, my guess is this is part of the Project Stargate initiative. And look, they had to sell their NVIDIA stake in the past to invest in OpenAI. So that $30 billion number seems to be huge. And so I'm always interested in the source of funding. I mean, clearly he has raised a lot of money. But, AI overviews has been doing really well for Google. And when you look at OpenAI on the consumer side, that MAU growth seems to have slowed. So I'll be curious to see what is he really betting on in terms of OpenAI, because competition has increased from Anthropic and Google when it comes to OpenAI's leadership.
All right, Mandeep, thank you. Plenty of fuel for the AI fire, at least today. Mandeep Singh of Bloomberg Intelligence. Staying with earnings now, and Starbucks is set to release results before the bell. It's expected to report comp sales growing for a second straight time. Bloomberg's Jennifer Creary joins us now. Jennifer, what should we watch?
Yeah, so top of investors' minds will really be whether Starbucks is showing signs of long-term profitability and margin recovery. And I think there are two things to highlight here. So the first is that key metric, comparable store sales. Now, the average analyst estimate puts that at 2% growth. As you mentioned, that would be the second consecutive quarter of growth for Starbucks. Certainly a welcome sign for investors after 6 consecutive quarters of decline. Now, notably, analysts are saying that much of that growth will come from the US domestic business. If you cast your mind back to the previous set set of results. A lot of that came internationally, so certainly a point to watch. Secondly, I think investors will be concerned about whether or not CEO Brian Nichols announces further improvements to the customer experience. Now, he's made this a central part of his turnaround plan, but of course, those improvements come at a cost, right? And there's a lot of concern over whether or not they're being rolled out across stores as quickly as investors would otherwise hope. Now, hanging on all of this is a note of caution, and that is the long-term fiscal guidance. So if you remember when CEO Brian Nichols arrived at Starbucks about a year and a half ago, he removed that long-term guidance and withdrew targets. So investors are looking for signs that there's long-term profitability, but they won't have to wait long, because on Thursday, management has said that it will issue fiscal 2026 guidance. So potentially something to boost investor confidence going forward.
Yeah, Nico coming from Chipotle. Jennifer, thank you so much. We'll be watching out for all of that a little later on. That is Bloomberg's Jennifer Query. Coming up, a big day for earnings, but also a Fed decision. Your day ahead next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Now, a look at what's ahead today. So AT&T and Starbucks are reporting earnings before the bell. A lot of earnings today, though. Then the Fed's rate decision, of course, at 2 p.m. Eastern, followed by Fed Chair Powell's press conference at 2:30 p.m. Eastern. That'll be an interesting one. And then we get the big load of earnings. Meta, Microsoft, Tesla, IBM, all among companies set to report after the market close. Let's take a look at some pre-market movers. I want to start with Amazon because indeed those jobs are getting cut. That email that went out in error, well, it was uploaded and 16,000 jobs in Amazon's bureaucracy are going to get cut, according to the company. It will give some employees 90 days notice. Then we have ASML shares up 6%, record orders in the quarter, and it was just pure AI demand. It's fueling the AI bulls today. Seagate as well, extending a post-earnings rally by the
11% this morning after its forecast beat. And here is your macro picture this Fed day. We have S&P futures pointed higher, the dollar index stabilizing, and the 10-year yield at 4.24.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York, and beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing, because I never watched the movies. You know, I was traveling the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He say, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start the Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Tech is going to continue to be the main earnings growth driver.
Investors are focused on who is at the center of the AI workload.
The problem is the valuation's already very high.
There is a high bar for earnings to jump over. Earnings are going to be great, but you're going to see significant multiple compression.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday with limited pushback.
Dollar's doing great. I'd want it to be just seek its own level, which is the fair thing to do. You could have it, I could have it go up or go down like a yo-yo.
The dollar sinking to the lowest level in almost 4 years. As stocks hit fresh record highs ahead of today's Fed meeting, investors are turning their attention to a big afternoon for big tech. Microsoft and Meta reporting after the close.
So, Jonathan, if last year was really categorized as maybe a trade war between the United States and their trading partners, this year is shaping up to be a currency war. And we saw that yesterday in the dollar, the Bloomberg Dollar Index dropping the second we heard the president give his remarks. And he basically was insinuating or suggesting he could be the individual behind the strength or the weakness of the U.S. currency. I could have it go up or down like a yo-yo. When you look at some of the more comments he made, though, he was talking about how China, Japan want to devalue their currency. This isn't new for the president. He's wanted a weaker dollar when it comes to trade deficit and exports.
I have to say, I wonder if we're taking this too far this morning. It's not what the president said is what he didn't say. And there's a sense that this is what the administration ultimately wants. Euro dollar back through 120 very briefly. And I have to sit here and respect this is where the market wanted to go in yesterday's session throughout the whole of yesterday and into the afternoon.
You're right. And there was a note I read this morning about the fact that the dollar sell-off will continue with or without Trump's blessing. But we do know that they're not going to potentially get in front of it. This is what they want. And this could potentially help U.S. companies when it comes to exports. The president has talked about this in the past. He said he likes the idea of defending a strong dollar, but his words, he makes a hell of a lot more money when it's weaker.
It's hard to make the case also that this is the so-called Sell America trade. Given what's happening in other asset classes, equities are record highs. In the bond market, you're not seeing major signs of that developing with 10s at around 420-something, someplace we've been at for the last several weeks.
You're only seeing it in the dollar right now. But you can look at what is going on with the U.S. dollar and think about what does this mean for everything else in terms of recalibration of equities or sovereign debt around the world if it continues on this decline.
Big moves in equities this morning. Equity futures on the S&P up by 0.4% on the S&P 500. On the Nasdaq, a major rally bought in Europe a little bit earlier this morning in Amsterdam, out of the Netherlands. ASML absolutely crushing it. Listen to these numbers. The estimate for orders was 6.85 billion euros. The number, bookings were a record 13.2 billion in 4Q.
So this bodes well for the entire AI space. They make the lithography machines that are then used by all these customers like TSMC, by Intel, by Samsung, that make the chips that people like Jensen Huang goes and purchases for NVIDIA. And given what we are seeing out of ASML, this AI boom looks like it's going to continue for 2026.
Big 24 hours for big tech coming up a little bit later after the close. We'll hear from Meta and Microsoft tomorrow. You'll hear from Apple. Equities up by 0.4%. Coming up this hour, we'll catch up with Keith Lerner of Truist with stocks at all-time highs, the former Kansas City Fed President Thomas Hoenig with a rate decision on deck, and James Steele of HSBC as gold continues a record-breaking run. We begin this hour with stocks building on record highs. Keith Lerner of Truist writing, we expect a modest U.S. economic uptick, and the equity bull market still deserves the benefit of the Dow. Keith joins us now for more. Keith, welcome to the program. Let's talk about these all-time highs and what you're expecting from the Federal Reserve later this afternoon.
Sure. Hey, well, good morning. The first thing I would say, Jonathan, that's really important, you kind of hit on this, is that, we're in a global bull market. We track about 40 countries around the globe. All of them, 100% are above their 200-day moving average. So that just kind of gives you an idea of the strength behind this. So it's not necessarily a sell America trade, but as in the past where it was mainly the U.S., what we're seeing is things really boring out globally. And then in the U.S., 10 of the 11 sectors are up this year as well. So that's also a sign of this, broadening. And then your question specifically around the Fed, I don't think that's the most important thing right now as far as the meeting today, because, the market is pricing in the next Fed rate cut to be around June. I don't know that there's much that has changed from the last press conference. I mean, we have actually seen a little bit of improvement in some of the job data, like initial jobless claims are hovering around 200,000. So I think the more interesting or the more direction that the market's going to be focused on is those tech earnings. And then, hopefully any day here we'll actually get a new Fed chairperson as well.
Well, maybe any day, any week, any month. I've got no idea, Keith. I want to pick up on the first point. I think it's so important. You can look at the dollar and create your own narrative. Look around the world right now. We can start domestically. Outperformance for small caps year to date speaks to a better outlook for the economic backdrop. That's stateside. What you see elsewhere, copper, record highs, the Aussie dollar outperforming. Keith, you can see it across asset classes that this looks like a repricing of the global economy and a repricing where we're going to see a better outlook for the year to come. Is that a fair characterization of the way you would define what's behind the price action?
I think that is part of it. I mean, when we think about the U.S., we're in the view that we're going to have this uptick, overall. And then, I think the U.S. dollar weakness is helping out. Maybe that's a sign of growth, but also, I mean, we have to remember Fed Governor Myron's, who came out with his thesis about this manifesto around the weak dollar as well. So I think this global change, this kind of resource-heavy demand over time, the tariffs, all this is playing into a bit of a debasement. And then when you think about in the U.S., the sectors that are leading this year are energy and materials. So that kind of plays with this global theme that we're seeing, as well. I will say, I think this is going to be, as we all know, a really interesting week for tech. Tech has really reset as far as expectations. And I think the setup is actually somewhat improved now after this kind of 3-month consolidation for the sector.
Keith, just sticking on the dollar for a moment, globally, what does this mean for Asian equity markets, places that are export-centric?
Well, it could be a bit more of a challenge but from an investment standpoint, it's actually been somewhat of a positive. If we think about, I'll hit on developed first. Like last year, the majority of the outperformance of international developed was currency. Local markets were almost the same. And as a U.S. investor, if you're seeing some currency appreciation overseas, that actually helps your returns. But I guess to your point, at some point, if the currencies like in Asia become too strong, then that will slow things down and hurt the overall economy. But I still think we're in this phase of, it's not enough to really suffocate the global growth trends that we're seeing. I mean, at some point, it will be. I just don't think we're there yet.
You mentioned tech as being potentially more important than the Fed today. Microsoft, Meta, Tesla. What are you looking for? Who are you most excited about?
Well, I think the one thing I think is somewhat constructive is if you think about last year, people were very excited about tech. They're talking about potentially a tech bubble, and since October 29th, which is when things kind of peaked out, the tech sector is down, while everything else has been lifted up. We looked at the relative valuations of tech to the overall market. Back at that October high, the premium to the S&P was about 38%. Where is it today? About 17%. And at the same time, the earning trends or the comparative earning trends are making new highs. So I think at least that bar for positive surprises has been lowered. When you look at underneath the hood, which you also are seeing this kind of big divergence with the semiconductors, which are at all-time highs, versus software, which is down about 15%. So I think the semiconductors, the news that we had on ASML is still showing, hey, this AI theme, it may have been pushed back, but don't forget about it. That's still the dominant theme of this bull market.
Keith, you mentioned the move in software and the weakness there. What do you think's behind it?
Well, I think there's a lot of concern around, that AI is taking over our software. Our head of equity said, the old saying was, software was eating the world, and now AI is kind of eating software, and it's something hard to disprove. And some of the new AI, like with the new AI from Gemini, I think is with the coding and so forth, and how quickly you can do things and efficiently on the software side makes people nervous. So it's hard to disprove it. So the software companies are going to have to come out and really try to discuss the demand that we're still seeing going forward. And also, as you have more AI tools, it may mean less licenses as well. So I think that's what the market is struggling. You're seeing a broadening overall market, but you're seeing more of a divergence within tech because of these cross currents.
Keith, do you expect those moves to be sustained then? Do you think it will be difficult for software to reclaim leadership?
I think you can certainly have an oversold balance, but I think the challenge for software is that it's hard to disprove. So even if they come out and say our numbers are still good, investors will be concerned about the future. I think you are seeing some value investors kind of nibbling down here since they've been hit so hard. So again, I would expect that you probably get some relief in the area, but it's hard to look at them as leadership anytime soon.
Keith, quick final question. Do you think it's fair to call this the least anticipated Fed decision of the last 12 months?
I'll go with that, and I hope that it becomes uneventful because, again, I think, with the market not pricing in much and tech earnings and a Fed chairperson at some point, as you said, days, weeks, or months away, it's just not the main focus of this market right now.
Keith, not at all. It's good to see you. Thank you, sir. Keith Lerner of Truist. Seems like there's a focus on the politics of the Fed right now and not the policy. And if you ask a lot of people this morning on what they're looking for from the news conference, that's the direction they're leaning in.
They want to know what the Fed chair has to say about the Lisa Cook hearing he showed up to, about what's going on potentially in the race. Is he going to stay on as a governor? Also from Anna Wong, our Bloomberg economist, saying her focus is going to be on whether Governor Christopher Waller supports the hold or dissents in favor of cutting rates. And what does that mean for his start in the race to become Fed chair?
The race continues. We've got to wait another week or maybe another few hours. I've got absolutely no idea. Let's get you an update on news elsewhere with your Bloomberg brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. President Donald Trump saying he's not worried about the dollar's recent slump. The president telling reporters he's comfortable with the greenback at multi-year lows, saying, quote, the dollar's doing great. His comments adding to the dollar's decline, currently trading at its lowest level in nearly 4 years. Meanwhile, Minnesota Democrat Ilhan Omar was attacked during a town hall as she called for consequences over aggressive immigration policies. The man appeared to squirt some kind of liquid on the Congresswoman before security and police tackled him, as you can see right there. A statement from her office saying, quote, the Congresswoman is okay, and she continued with her town hall because she doesn't let bullies win. And Amazon is cutting about 16,000 jobs across the company as part of ongoing restructuring efforts, according to a statement. The company is saying most affected employees will receive 90 days to seek internal roles. Amazon notified employees yesterday about the impending job cuts in an email that was sent by mistake. That's your Bloomberg Brief. John.
Not a good look, that's for sure. Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, embracing a weaker dollar.
Dollar's doing great. I'd want it to be just seek its own level, which is the fair thing to do. You could have it, I could have it go up or go down like a yo-yo.
Kind of describes the last 12 hours or so. John Lieber of Eurasia Group joins us next. Live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Big day just around the corner. Federal Reserve later on this afternoon. That's not the big moment, that's for sure. At least that's not what's anticipated. The least anticipated Fed meeting in quite a while. The chairman speaks at 2:30 Eastern Time. After the close, we'll hear from Meta, Microsoft, Tesla, big tech earnings reporting after the closing bell. On to tomorrow when we hear from Apple. The fireworks are elsewhere. In the equity market, all-time highs on the S&P 500. Futures add to the move, up a third of 1%. But elsewhere, I'm talking about foreign exchange. The dollar at multi-year lows, under surveillance this morning, embracing a weaker currency.
I think it's great. I mean, the value of the dollar. Look at the business we're doing. No, dollar's doing great. I'd want it to be just seek its own level, which is the fair thing to do. You could have it, I could have it go up or go down like a yo-yo.
So here's the latest this morning. President Donald Trump downplaying dollar weakness, saying he's comfortable with the greenback's value after its steepest one-day drop in some 8 months. Bloomberg's Tyler Kendall joins us now from Washington. Morning, Tyler.
Yeah, hey, John, good morning. Well, a rather relaxed tone from President Trump. As we know, a number of issues are weighing on the currency, driven in part by the unpredictable policymaking here in Washington, including but not limited to concerns about the Fed's independence, these heightened tensions between the U.S. and NATO allies, which really came to a head last week over Greenland, and now even the possibility that we could be heading towards a partial government shutdown. Now, as you well know, there was a lot of speculation headed into the second Trump administration that officials could be more comfortable with a weaker dollar policy, considering that it would make U.S. goods abroad cheaper and could help boost U.S. exports. And President Trump has taken some competing views when it comes to dollar policy before. He's previously touted that a strengthening would be good for bilateral trade negotiations, but has also long maintained that a weaker currency could help those very industries that he has been focused on bolstering, most notably domestic manufacturing. And he made these comments ahead of a speech in Iowa yesterday, where he really did maintain focus on his economic agenda. He tailored his remarks to this farm state audience that has had some mixed outcomes when it comes to President Trump's policies, particularly around tariffs and competition with China. In fact, Iowa is the second top soybean producing state in this country, and we know that that has been a target of Beijing's recent retaliation over the last few months. John, just quickly to keep on China and to end here, we know President Trump has long accused other economies of trying to get weaker exchange rates to boost exports. Yesterday, he name-checked two Asian economies, China and Japan, saying that he often fights with them over the issue.
Both in focus at the moment, that's for sure. Tyler, also in focus, Chairman Powell later on this afternoon. Are we going to get an announcement ahead of that, a new Fed chair announcement, someone nominated sometime soon?
Well, according to President Trump, it is coming any day now. And while we may not get that announcement soon, it is very likely we will hear from the president later today, likely heaping on that criticism of Jerome Powell if the FOMC does hold rates steady. But, John, at the moment, it is our understanding that he is still with those four top contenders. Of course, the NEC director, Kevin Hassett, Christopher Waller, the current Fed governor, former Fed governor Kevin Warsh, and then Rick Reeder of BlackRock, as Bloomberg News had reported last week that he was gaining some steam when it came to his potential as a contender, considering that Washington has raised concerns about confirming President Trump's potential nominee over the latest allegations lobbied against the Fed chair and the subpoenas issued by the Department of Justice. Of course, John, as you well know, today is going to be President Trump's, Fed Chair Jerome Powell's first encounter with reporters since he was issued those subpoenas, and no doubt that's going to be something to watch.
Tyler, thank you. With the latest down in Washington, without a doubt, box office, special programming later on this afternoon, Bloomberg Surveillance. I have to say, the decision itself is appearing to be pretty boring. Most people assume that they're going to keep rates unchanged, but the future of the Federal Reserve is a topic worthy of a lot of attention, and this process is getting messy. We've seen messy things happen before. The former president took a long time to renominate Chair Powell. Before that, going back years, I remember President Obama really dragged his feet over Janet Yellen. At the time, he wanted Larry Summers, and that took a while. That got messy, too. But this is probably the messiest I've seen for quite a while.
Well, we do know the president does take his time when it's a position he really does care about. Look how long it took him to decide. Remember the Treasury race? That was straight up Game of Thrones. This morning, the Wall Street Journal talks about how the prediction markets, the poly market odds have been all over. And they say that basically, why still hasn't he made this decision? People close to the process are beginning to wonder whether the president is looking for something he won't ever find, a unicorn.
John Lieber of Eurasia Group joins us now for more. John, welcome to the program. What's taking so long? Why is the administration dragging its feet on such an important topic?
I think, and no one's going to tell him what to do here, and he's the final decider. And I think that he's got the same slate of candidates now that he's had for the last 6 months. He's narrowed down a few. I think we can say Michelle Bowman's not really in the race anymore. But these four men that he is looking at, I think that he genuinely hasn't made up his mind. Now, a couple of weeks ago, he did indicate that he had made up his mind, and we were getting information that suggested it was going to be Kevin Hassett. And that I think the bottom kind of fell out of that with this indictment or whatever it was that Jerome Powell got over the Fed remodeling. And so that kind of derailed the process, I think. And without that intervention from the Department of Justice, I think this probably would have been decided 3 weeks ago. And now kind of it's a jump ball again. So I think predicting what Trump's going to do here is very difficult. And frankly, predicting the timing or content of any Trump announcement, I think we've learned is a fool's errand. It could be any one of these four. I still think Hassett's in the running, and he could announce it anywhere from 20 minutes from now to the middle of March. So I think that this is there's still a lot of drama left to play out here, and I think Trump likes it that way.
Well, when it comes to Kevin Hassett, he's trading at some 6% in polymarket odds. You're saying it's underpriced right now. Was it the fact that investors were saying we don't view him as credible as some of the others? And would that be potentially an about face from Wall Street that could push Trump into saying, okay, I'm going to make my decision and I'm going with my gut, which was originally likely Kevin Hassett?
Yeah, well, I think that Hassett I think that the pressure on Trump to put somebody kind of independent and credible went up after the DOJ sent these documents, whatever they did, to Powell. And so because of that, Hassett, who's probably reasonably seen as the person closest to Trump in the race here, his odds dropped, and Trump said, well, you're not really my guy anymore. He also, of course, had those comments he made about wanting to keep Kevin in the White House, Kevin Hassett in the White House, which I think is what really caused the market to move. Now, with some distance from those DOJ allegations and the fact that Hassett's been very loyal to President Trump for a very long time, longer than these other three, and is clearly more like President Trump's guy in the position, I think as you move through time, the longer this goes, Hassett's odds should be considered rising. Now, I don't know if they should be 5% or 30% or what they should be, but I do think that he's still a contender along with the others.
John, do you think there's someone we're not talking about that potentially the president could decide on?
Yeah, absolutely. I mean, I think the president kind of keeps his own counsel on these things and likes the drama and likes the surprise. So I think Scott Bessent is still a legitimate candidate, even though I think he's better off at Treasury. I think Moran could potentially be a candidate. I think there's probably a lot of people out there where the president's going to be looking for options if he doesn't like the current pool he has, which is exactly what we saw him do with the Treasury hunt in the period before the inauguration, where you had these front runners out there, everyone knew who they were, and then all of a sudden Trump's talking about people like Kevin Warsh for Treasury because he's not exactly satisfied with the Bessent versus Lutnick options that he'd been presented. So this drama really could go any way. We've seen everything from this president, and it wouldn't surprise me. There's no twist and turn that would surprise me right now.
We're deep into the realm of speculation here, so forgive me, this is not my base case, but I still believe, like John, there is a chance that the president comes out and just says, here's the guy, and the guy's Scott Bessent, and he hasn't even agreed to it. And he just says publicly, that's who I'm picking.
Well, based on stories of how the president has elevated individuals before around him to different positions, they find out moments before, sometimes before he sends that truth. What you're saying is basically he would send the truth and then say, sorry, Scott, I know that you were in charge of the search, but the search has led me to you.
John, we talked about this yesterday. The issue is there's a home bias here, and the home bias is Wall Street. And I understand why this is so important right now to Wall Street, but for the country, the top issue right now is immigration enforcement. John, can we finish there? Because a year or so ago, the president won the argument convincingly. It's a pretty dramatic turn of events to lose the country so quickly on an issue he dominated on back in November of 2024. John, how does the administration fix this?
Yeah, look, I think overreach is a pretty common pattern with administrations who come into office thinking they have a mandate. You saw the Obama administration do it. You saw the Biden administration do it. You saw the Bush administration do it. And when that happens, there's going to be a backlash, and you got to reverse course. So I don't think Trump will ever get back to where he was in terms of the credibility he had on immigration or getting the credit he deserved for shutting the southern border, which is something that Biden said was impossible to do. I think he squandered all that goodwill, and now he's going to be playing defense while also going on this very political defense while continuing this very aggressive campaign of deporting illegal migrants in the United States. I think the appointment, the elevation of Tom Homan in Minnesota shows a renewed focus on illegal migrants who have committed crimes, and that's going to be important for President Trump because it narrows the scope of what they're trying to do while still getting those deportation numbers up. But I also think a challenge for Trump is that they've lit a powder keg here, and not only are you not going to get the political goodwill that he could have gotten on immigration, there's going to be a lot of resistance that's popping up among not just kind of radical left-wing people, among normal people who see the aggressive actions of their government being taken against citizens, and that's going to be an ongoing problem for Trump.
John, appreciate your time. Thank you, sir. John Lieber there. of Eurasia Group. That is going to be a difficult one to turn around ahead of the midterms.
And to John's point, it's going to be from people like Senator Lisa Murkowski, Senator Tom Tillis. Basically, they are coming out yesterday and they are saying Kristi Noem needs to go.
Up next on the program, we'll catch up with the former Kansas City Fed President Thomas Hoenig with a rate decision on deck this afternoon. Plus, Danny's with us. She's got your morning movers. China approving purchases of NVIDIA H200 chips for the first time. That stock is up in the pre-market by 1.6%. From New York City, you're watching Bloomberg TV.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Five days, no losses on the S&P 500 coming into Wednesday through the close Tuesday at all-time highs. The longest stretch without a daily loss of the year so far on the S&P 500, up a third of 1%. On the NASDAQ, thank you, ASML. We'll get to that in just a moment. The NASDAQ up by 0.9%. In the bond market, going into the Fed. What a snoozer. So many of you are expecting the two-year bond yield right now just about in line with Fed funds. 357.12, yields down by not even a basis point on 10s at the moment. The range for the year, intraday, 410 to 430. At the upper end of that range, 424.72. Going into the Fed meeting later on this afternoon. The fireworks in foreign exchange, check it out. Euro dollar, 4 days of real euro strength. This morning, a turnaround. This is important. So is the president embracing dollar weakness or not? I've got no idea, but I can tell you this. The ECB is starting to push back. Governing Council member out of Austria speaking to the Financial Times saying if the euro appreciates further and further at some stage, this might create, of course, a certain necessity to react in terms of monetary policy.
This is why this is going to be the year of potentially currency wars. And the president was talking about that yesterday, saying he could make the dollar go up or down like a yo-yo. He was talking about in that moment, not Europe, but he was talking about Japan and China and how they continue to devalue and they need to push back. This is why this is shaping up to be an incredibly interesting story, especially after the rate checks we saw from the New York Fed with the banks over the weekend.
Euro dollar above 120 for about a heartbeat, dropping back below that level. Right now, 119.69. That's the cross-asset price action. Let's get you some single names, some morning movers. Here's Danny with more. Hey, Danny.
Hey, John, you mentioned ASML. What a morning for the chip makers, and chip makers of all kinds. The results from the Dutch company were incredibly strong, lifting the sector in the U.S., but we also had earnings here for American companies, Texas Instruments being one of them. Again, a different flavor of chip makers. It's analog chips, but these go in everything from cars to different hardware. And it's a good sign for the economy as a whole. Apparently, the backlog is cleared and customers are buying again. So shares are up 8.4% with a positive outlook. Also giving a positive outlook is Seagate Technologies, also beating for the current quarter too. For them, again, it is a story of demand in AI. They don't necessarily do memory, they're more of hardware storage, but again, that demand is off the chart. Shares are up 10.4%, staying with tech and AI. NVIDIA shares also higher this morning by just about 1.5%, just exceeding that level. Bloomberg had reported a couple weeks ago that China was in the process of starting to approve H200 chips for big China tech companies. Well, reports this morning suggest that that approval has happened, and the likes of ByteDance, Alibaba, those big tech companies have indeed gotten their approval for H200 chips. So again, those shares rallying in the pre-market, John.
Danny, thank you. More from Danny in the next hour. On our radar this morning, SoftBank doubling down on its OpenAI investment. Sources telling us here at Bloomberg, SoftBank is in talks to invest as much as $30 billion in the ChatGPT maker. SoftBank is one of OpenAI's largest shareholders with an 11% stake. Elsewhere, ASML shares trading higher at the pre-market after smashing fourth quarter order estimates as the AI race fuels demand. The company behind chip-making machines also announcing plans to cut about 1,700 jobs, aiming to streamline the organization. And finally, President Donald Trump indicating he's comfortable with the dollar at multi-year lows, saying, quote, the dollar's doing great. This following the greenback's steepest one-day drop since last year's tariff rollout. The president's comments adding fuel to the dollar's losses.
Yeah, immediately you saw that knee-jerk reaction after the president was talking about how other economies like China and Japan have devalued. We've heard him talk about this, not even just last year, but on the campaign trail. In 2016 as well, the president has talked about how a weaker currency, although he loves the idea of a strong dollar, a weaker currency actually helps a U.S. manufacturing base, and that goes hand in hand in what they are trying to achieve with the tariffs. Last year's tariff wars, this is the start of, I think, an incredible FX war we're going to see play out.
What do you think the Treasury Secretary's position is on some of the comments and the way they were interpreted in the last 24 hours?
I don't know if he would describe it as the president having the ability to make the dollar go up or down like a yo-yo. That's what the president's words were.
No one wants a stronger currency right now, apart from maybe the Japanese.
That's right.
And maybe that's why something might be able to get done on that front. Let's turn to the Federal Reserve. The central bank widely expected to hold interest rates steady today. The former Kansas City Fed President Thomas Honig writing, there appears to be little need for further monetary easing. If the Fed were to cut rates, it would lose credibility. Thomas joins us now for more. Thomas, welcome to the program. Let's talk about why so many people aren't really looking forward to anything happening later on this afternoon. It's the bounce back in jobs, the decline in unemployment. Thomas, how much weight should they put on the most recent labour market data?
Well, I think they should obviously put some weight on that because that is the data. So you do look at that. But I think more importantly, they need to look further than that because this is number one, as I've said before, an election year. We're coming off a strong economy. Fiscal policy is stimulative, and the Fed and the president has talked about increasing defense spending even further, so that would be stimulative. Tax reductions are in place. Monetary policy is easy. It's accommodative. Real rates are less than 1%. I think that's forgotten. And the Fed is now in quantitative easing again, in the order of $40 billion a month. That's a big push of liquidity into the marketplace. So those are all stimulative. So there's an enormous amount going on. And then you have the dollar, which you're just talking about. The president talking at down almost, if I can say that. So there's so much stimulus in place. We're in an inflationary boom right now, and I think inflation, not immediately, but down the road, may be an issue. So the question is, obviously, you know, will they cut later? And I think the pressure will be on them to cut from the administration and perhaps others, the market even. But I think it would be an inflationary mistake for the long term.
Well, Thomas, let's get into that. Why do you think they should be so uncomfortable with the outlook for inflation when so many people are pointing to the disinflationary forces coming out of, say, shelter for the year ahead? Where would you push back?
Well, first of all, shelter is one of the areas that has always shown some slowing there. But the fact of the matter is, I think there's already efforts in the administration to boost housing. That in the short term, that's even got to be inflationary, and in the long run, given the amount of, depending on the amount of stimulus put in, could also further that. So yes, it right now has been holding inflation down, but there's so many other things pushing inflation up, including the stock market, the wealth effects going on. Those are things not to be ignored, I think. So you have to be careful with what one thing you focus on. There's so many more things in play right now.
So, Thomas, there is some deep skepticism about the administration's ability to turn around some of these stories. Is your message, don't bet against them? Take them seriously. They could see some results this year.
Take them seriously, because they are determined to be reelected. They're determined to put as much stimulus in to keep this economy strong, and they'll risk the inflation in the desire to get the economy, keep the economy strong and high, and people optimistic.
Thomas, when you talk about inflation, I noticed you haven't mentioned tariffs, something that was a huge debate last year. Do you see impact of tariffs starting to hit the economy and potentially being inflationary?
I think much of the inflation part of it has been mitigated. Some of it's been passed through. Yes, there's more to come, and yes, it will add, but I don't think it's the main story anymore. First of all, Trump is back and forth on tariffs, depending on where the economy is and his own political goals. So yes, I do keep an eye on that, but it's the broader issues that I think really require more attention, the most attention from the markets and from the consumer today.
Neil Dutta blew up my email this morning talking about the Amazon job losses. We are seeing 16,000 announced this morning, but also UPS in the last 24 hours. They're cutting 30,000 jobs as it moves away from Amazon. Now, this isn't in the BLS data coming out. This is where companies in corporate America are telling you. At this point, do you think it would be necessary for the Fed to still have that concern about shoring up the labor market?
Well, the Fed will have that concern. I mean, Powell has made it one of his major issues. I think it will be a factor. But I think at this point, it should not be driving the Fed policy. Now, there will be pressure on them around this. I don't take that away at all, but I don't think that should drive policy. I think they really have to look at just how much other stimulus is in the economy, because monetary policy really can't solve the short-term employment situation, given the structural changes taking place in this economy. And so it's an important factor. I don't want to dismiss it at all, but it's not always in the Fed's, shall we say, lane to be focusing only on unemployment with so much other stimulus coming into the economy. And look at gold, 5,300 going up. These are inflationary indications that you should not ignore as a central bank.
Thomas, when you look at the bond market, though, why do you think you're not seeing a corresponding pickup in bond yields?
Well, because the Fed's adding $40 billion a month of new money into the system. There's downward pressure from that. It's got to be acknowledged. It should be acknowledged. And so that's part of why you're seeing this suppression in the yield curve to some extent. And I think it should not be ignored. It's there. It's real. And the Fed will keep it up. And they talk about it being temporary through the tax season. Given the amount of debt in the economy that has to be financed, $2 trillion new debt, the Fed is going to be under enormous pressure, and it so far has agreed to buy some of that debt at a fairly good clip per month.
Thomas, whoever gets nominated to be the next Fed chair is going to be under even more pressure. Can we talk about how unruly that committee might be?
Well, that committee is a very polite committee, yes, but there are going to be people who are very concerned about the amount of stimulus already into the economy, and I think we're going to see that that's going to play out inside it. But I think they will stay with the Powell leadership at the moment. And I think Powell is going to be on hold for a while, if to the extent that he can, unless there's a shock or some surprise, and then Powell will quickly change. But without a surprise or a shock, I don't see the committee, even though they'll talk about it inside, what the long run is, they won't change direction at this point.
Hey, Thomas, good to see you. And my apologies for stepping on you at the end there. Thank you, sir. Thomas Hardick there.
Sorry.
Thank you. The former Kansas City Fed president weighing in on the politics and a policy.
So he's really anchoring his debate on how the Fed should look at this because of fiscal stimulus coming out of Washington this year. It's a midterm election year. They want to run it hot, which is why he's so concerned about inflation. I was really struck that when he talks about inflation, he's not really thinking about tariffs. He says that's not really the issue. The issue is the policies this administration is talking about, whether it's housing, whether it's tariff dividend checks. They want to run the economy hot going into this election.
It's the boost to growth so many are expecting. Equity futures right now, by the way, positive on the S&P 500, adding to the record highs we printed just yesterday. With an update on stories worldwide, let's check in with Yahira with your Bloomberg brief. Hey, Yahira.
Hi, John. We're seeing shares of AT&T rising 4% in the pre-market after reporting fourth quarter earnings that beat on both the top and bottom lines. AT&T's board also approving additional share buybacks as it expects to repurchase about $8 billion of common stock in 2026. As for the full year, AT&T posting a better than expected EPS forecast. Meanwhile, in Texas, Governor Greg Abbott ordering state agencies and public universities to immediately stop new H-1B visa hiring for skilled foreign workers. Abbott says the program has been used in ways that disadvantage American workers. The halt will last through May of next year. The governor's order does not affect the private sector. And Apple CEO Tim Cook is weighing in on the fatal shooting of ICU nurse Alex Preddy in Minneapolis. In a memo on Apple's employee website, Cook writing he's, quote, heartbroken by the events and calling for calm. Cook adding that he discussed the matter with President Trump earlier this week. That's your Bloomberg Brief. John.
Yahira, thank you. Thanks for the update. Up next on the program, going for gold.
Gold wins everything. I'm not going to short gold. It doesn't take that much buying to make the price of gold go up.
That conversation up next with James Steele of HSBC, live from New York City. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Equity futures right now, the S&P 500 shaping up as follows. Positive by 1/3%, up by 0.9 on the Nasdaq. All-time highs coming into Wednesday. Under surveillance this morning, records elsewhere going for gold.
Gold wins everything. I'm not going to short gold. In a time of, yes, rising equity prices, yes, risk on in one sense, and yes, low volatility, but historically very high uncertainty economically and geopolitically. People are trying to, they're just falling in love with a very old-fashioned solution to that problem. And it doesn't take that much buying to make the price of gold go up.
So here's the latest this morning. Gold surging to a new all-time high, extending its record rally on continued dollar weakness. James Steele of HSBC writing, gold remains supported by geopolitical risks and may rally further if the dollar weakens again. James joins us now for more. Jim, good to see you.
Good morning.
Thanks for being here. What a turnaround of this story the last 4 years or so, this rip-roaring rally. What's aiding the new leg, the fresh leg of this leg higher?
Well, you know, in all the time that I've been covering the gold market, the same 12 or 15 factors drive it. The trick to analyzing it and trying to figure out the direction is which of those is in the driver's seat. And in the last few years, geopolitical risk has risen to the top. And I think if you look at we've done studies on the geopolitical risk index and the correlation. And what we found in the last few years is that unlike periods before, gold would give back the gains it made on a particular geopolitical event. Now it's not. It's retaining a good portion of them. So then it then goes up again when the next event occurs. And that's why we've been able to get above 3,000, above 4, and now above 5.
Is there something about the changing character of those geopolitical risks? Can you pinpoint something and say, it was Russia, it's what happened there, and because of that, there's a new floor for gold?
Well, it was kicked off by the invasion of Ukraine. This current leg of the rally dates back to 2022 with the invasion of Ukraine, and subsequently very heavy central bank buying later that year associated with those geopolitical risks. Now, since then, we've had a number of other incidents, and, pick the one. We go from one to the other. So we don't seem to have, there's Iran, there was Venezuela, there's Ukraine, and without putting too much emphasis on any one of them, I think it's the string of events and the cacophony of them that has kept the risk level high and sent money into both a hard asset and a safe haven asset, and that's gold.
So where do we go from here? We're past $5,000 a troy ounce, which many people were expecting us to get through at the end of this year. We're not even at the end of January. How much higher can it actually go?
Well, that's right. And we had said a while ago that gold would get to $5,000. It's done that, as you pointed out, very early in the year. We're now looking, and then we've looked at 5,500 in our latest research, but that is also quite close. So you've got to take into account, I mean, this near parabolic moving gold does invite volatility, and it does invite profit taking on any positive news that might come out, be it on any one of a number of fronts. Something could happen to cool this a little bit. So we are going to see, because we have a lot of new money coming into the market, that's going to be volatile. It's going to be prone to liquidation. So we're going to see frequent pullbacks. So I think rather than pinpointing an exact number where it can go, I think what we've got to be prepared for is increased volatility. We already saw selling into this rally overnight, and yet the market's gone back up again.
Recent pullbacks, or a recent pullback, could be something like potentially announcing a peace deal in Ukraine. But isn't the central bank buying enough to bolster where the price is right now?
Well, no, and I don't want to attribute too much to the central banks. They kicked off the rally and they've sustained the early part of it, but we think their buying was maybe a little less last year than it was the year before. Now we've got a whole range of institutions coming in, and many of them are agnostic to the actual price of gold. It's more of a hedge. Because if you have an equity portfolio, you're looking for a portfolio diversifier. If you think, and I'm not saying there will be a correction, please don't think I am.
Of course.
But you've got to count on the possibility of one, and if that's the case, then you're going to look for something that is not correlated with paper assets, and that's gold.
Is there evidence that in this regime that's the case, given that at the moment it appears to have a positive correlation with equities? Gold has had this massive rally at the same time. Equities have kept rallying too.
Well, that's right, and that's some of that money coming in. You've got to bear in mind that gold, normally this doesn't matter, but gold is actually quite small compared to all the financial markets. All the gold above ground is something over 1-2% the value of all the financial markets. So all we need is leakage coming in from those markets to actually send us up. And silver and platinum are even smaller. So you think about the money that could move them, that could never have moved the dollar, could never have moved the fixed income or equity markets.
What is gold beginning to replace in portfolios? What are you noticing?
Well, it's not so much, I think, a replacement as an addition. I think what you're seeing now is a lot of portfolio managers are going to allocate a certain percentage to gold, whereas they would have had no allocation or very, very low earlier on. Same with central banks, by the way. The allocation that many of them of non-OECD central banks, I'm talking about principally, are giving more allocation to gold. Some of them, like Poland, have announced a very high allocation.
I have a theory, and I'm going to share it with you, and I'd love your feedback on it. You've been doing this a long, long time. Traditionally, gold bugs were considered followers of a religion, and they were considered almost slightly crazy. And I just wonder if the arrival of Bitcoin over the last decade and the dominance of the crypto conversation has almost legitimized gold as an asset class in an unattended way. Would you put any weight on that? Just a psychological shift in the last few years.
That's an interesting way to look at it, and I hadn't thought about it in that before. What we've concentrated on is looking to see if Bitcoin has encroached upon gold, and we cannot see any cannibalization in the gold market by Bitcoin. So we don't see a drop in trading globally in gold and the demand for gold because of that. Now, you pointed out there's always been a fringe element in the gold market, and it's basically founded on distrust of government, which we've never been associated with that branch. But as other things come up, what I think you're pointing to is gold has moved back into being more mainstream. Many asset managers, many portfolio managers who have never contemplated buying gold are now becoming acquainted with the bullion market. So in that sense, you're right. It has moved back to the center.
Do the two trade in parallel? We're not seeing the same rip we're seeing in gold as we are in Bitcoin. Why is that?
No, they don't. And there's a different profile in gold. There's a different demographic. And also, think of gold at its essence is the physicality and the tangibility of it. And that's why it's the only commodity currency that survived into the electronic age. And despite the digitalization of the world, yet we crave something physical, something hard. And Bitcoin does not offer that. Crypto, I shouldn't emphasize them, but crypto does not emphasize that. And I'm not saying crypto is good or bad. I'm just saying that gold is different and you don't get a parallel. And we haven't seen any statistical correlation between the trading.
Are you seeing any signs that this has gone too far in other metals, palladium, platinum, etc.?
Well, yes, I think you could make that case for silver. The silver, if you look at the gold-silver ratio, which is the number of ounces it takes to buy 1 ounce of gold, it moved to between 70 and 80 for most of my career. which is, as you pointed out, a very long time. My hair was the color of gold. It is now the color of
You've still got
platinum.
it, so you're doing well.
It went out to 106 in October, and then silver has rallied, and it's now around 45. So that would imply that silver is very expensive, and I don't think we quite have the same geopolitical and other reasons to buy silver. So I suspect that the canary in the coal mine might be more the white metals, which are much smaller and have also moved up very quickly. I mean, there's good reasons for silver to be strong, but it's very, very high right now. So I would keep an eye on those and see how that, instead of see if the tail wags the dog a bit.
Got it. Jim, clinic, as always. Great to lean on your experience. Thanks for being here.
Thank
you, sir. James Still there of HSBC. Up next on the programme, Stuart Kaiser of Citi, Tobin Marcus of Wolf Research, Mandeep Singh of Bloomberg Intelligence, Jonathan Pingle of UBS. The second hour of Bloomberg Surveillance is up next.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We think that the Fed can cut rates a few times this year.
It's time to take a breath on these rate cuts.
They're in a holding pattern given the strength in the economy.
There'll be a dovish meeting even though they won't cut.
Hopefully we see a little bit more guidance from the Fed.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action, your scores look like this. All-time highs coming into Wednesday. We had some weight to the rally. Up a third of 1% on the S&P. On the NASDAQ, up by 0.9%. Big tech having a big run going into earnings after the closing bell. We'll get to that in just a moment. The fireworks, the drama in foreign exchange. Check it out. The dollar showing just a little bit of strength after 4 days of weakness. The dollar yesterday, the biggest one-day drop on DXY going back to August of 2025. The president's words not helping the situation. You'll hear from the president again a little bit later on today. You'll also hear from Chairman Powell, and then you get the results. Meta, Microsoft, Tesla, after the closing bell.
So everyone I know is so excited about the tech results and what is going on with the AI trade, and we can see more legs higher when it comes to that. But for the dollar, this is really incredibly interesting as how this year is shaping up. It comes after the rate checks the New York Fed did in terms of what is going on with the dollar-yen trade. The president saying, I'm the person that likes a strong dollar, but weak dollars make you a hell of a lot more money. That's what he said last year, and that's what we're seeing almost in action happen this year. And he's basically saying, I can make it go up or down, his words, like a yo-yo, and the market took that as like they're not going to get in the way of this, and they actually might be encouraging this.
Yeah, there's a phrase, pushing on an open door. This is where the market was leaning anyway. I'm not sure how much weight I'm going to put on the president's words just yet. Want to hear what he's got to say about it if he's asked about it again later on today. And also, where's the Treasury Secretary and all of this? I'd love to hear from Treasury Secretary Scott Bessent about whether this is something they actually want to see.
Well, potentially he's having calls with his Japanese counterpart when it comes to the Treasury Secretary, or at least at this part, maybe doing the final interviews from who's going to be the next Fed chair. But this is something this administration is leaning into. And what is so interesting, it's just the dollar right now. There's no movement right now in bond yields. You have equities, again, at an all-time high. It is just the dollar that is showing weakness, and this is going to be incredibly challenging for our big trading partners.
I've heard the case, we've all heard the case, it's sell America, but you look elsewhere, small caps outperforming, doesn't sound like it's sell America. It sounds like it's by the global economy right now. Kospi at a record highs. South Korean equities have absolutely ripped. That's usually something you'd see alongside a better growth profile for the global economy. The Aussie dollar outperforming, that's the strongest currency over the last 12 months or so. That would speak to the same thing. Copper as well. All of these things are lining up for a better outlook for the year ahead.
And when it comes to the Aussie dollar, they're definitely related to what's going on, as you say, in copper and the commodity complex moving higher, not just the precious metals. We just talked to Jim Steele, but what's going on with gold and how that is just absolutely on a tear, but the entire complex, because you need these materials if you are going to have manufacturing build out when it comes to AI. And that's why today, what is so interesting, what people are looking forward to more than the Fed chair speaking, is actually what does Meta and Microsoft have to say?
What a run for gold. Look at this, 52.60 right now this morning, up another 1.5%. Wasn't it the year-end price target from Goldman a week ago today?
Yes.
When they came out and said 5,400.
Yes.
And like we're right there.
And an individual at RBC is talking about 7,000 at the end of this year. I loved your comment about Bitcoin. I actually saw a meme on Twitter where just a young kid who's like, I'm going to beat the market. I'm investing everything in crypto. And then it's a picture of his grandma who's like, no, I told you. You should have gone with the old school gold and silver, and you would have outperformed.
Gold is on quite a run, that's for sure. More on that later this hour. Also, catching up with Stuart Kaiser of Citi with stocks at record highs, Tobin Marcus of Wolf Research on the future of Fed leadership, and Jonathan Pingle of UBS with a rate decision looming this afternoon. We begin this hour with stocks holding near all-time highs ahead of Mag 7 results. Stuart Kaiser of Citi writing, we continue to see upside in cyclicals ahead of earnings and key macro data in early February. Stuart joins us now for more. Stu, good morning.
Hi, good morning.
We've seen a lot of that outperformance already so far year to date. Small caps outperforming large. The Kospi, we talked about South Korean equities. There seems to be a cyclical tilt to a lot of the price action. What's happening?
Yeah, 100%. I think clients were really geared up for the stimulus to hit the economy to start the year. We got that nice sort of turn lower in the unemployment rate, which kind of kicked off the consumer cyclicals trade. And I think it's, to your point, pushing on an open door. That was a door that was wide open, and people are happy to kind of be pushing right through it. You know, the Fed's data dependence, that adds a little bit of uncertainty. But honestly, we haven't talked about all tax refunds. You know, we're going to get that data the next couple of weeks, and if those tax refunds look the way people expect them to look, then, you know, we do see another kind of at least leg or half a leg higher in these cyclicals in early February.
Let's pick up on the dollar weakness that so many people are talking about this morning. We've all seen the headlines, sell America. I want to interrogate the base case right now and the narrative. I want your thoughts on this. Are we looking at running away from sort of policy fears or just embracing growth hopes worldwide?
Yeah, I mean, hopefully it's growth hopes, because if we run away from policy fears, that's quite a different impulse on the market. You know, the Japanese yen thing sort of hits the market in two ways, I think. One is you have that long end bond yield, which is about policy and it's about fiscal. And the fact that that started to run away, I think definitely got people's attention. You know, the yen carry trade is more in the front end. That's short-term rates. That's more about risk sentiment and leverage. So I think those two things are acting on sort of different parts of the market. Frankly, I'd be a little bit more worried about the long end bond yields. You know, the short end leverage stuff can be painful, but it kind of works itself out pretty quick. If we really get that sort of long end bond yield moving, and we've already seen it happen in bonds and in gilts and now in JGBs, if that spreads over to the U.S., that's a bigger issue to me.
Any signs that's happening, though? Because I've been very surprised by how insulated the global debt market seems to be in the face of what developed in Japan just last week.
No, I agree. It's pretty encouraging, I think. That, I mean, look, we got an 8 or 10 basis point move in U.S. 30, so it hit the U.S. It just, the market seemed to absorb it pretty well. If you look at, you know, what has kicked these things off, in Japan, it was really about, you know, rolling back some taxes. That's fiscal. In the UK, it was really about spending. It was fiscal. So it seems like you don't know when it's going to happen, but there is exposure to these fiscal headlines. And, you know, hopefully in the U.S. we don't experience it, but I just wouldn't write that one off as a risk solved.
So these are basically big structural moves that you think at some point could impact the United States.
You know, that was yes, but we've been wrong about it for 6 months. So I don't want to, you know, don't want to toot our own horn on this one. But yes, I mean, look, you have real fiscal issues. I mean, there was a headline: all the senators getting elected today will be in the Senate when Social Security runs out of money, right? So these are big structural issues that need to be dealt with. But to be fair, equity markets have rallied through it. Bond volatility until recently has been pretty kind of well contained. So we do think it's a real risk, but you know, it doesn't mean you can't solve that risk. But we do think that's kind of a sneaky risk in the background, and we still like owning some rates volatility just in case on this.
You mentioned the tax refunds. We spoke to Tom Honig, who was talking about this fiscal impulse, which he thinks we're going to be running a hot economy, but also that's going to impact inflation. How do you view how the tax refunds actually might impact the real economy when it comes to maybe sticky inflation?
Yeah, it's a great question. I mean, average tax refund, call it $2,900 over the last 15 years. There's rumors it could be $1,000 higher. So you're looking at 30% higher average tax refunds. You know, our economists have that about 0.5 percentage point GDP impact. We have gotten questions from clients about back half of this year. Do we start to see inflation turn higher? It's not the house view from our economists on the inflation side. But look, if the tariffs stay in place and if you layer on top of that some fiscal, it is a risk, but I think for right now, people are focused on what do I do in the front half of the year? And, you know, talk to me about midterms and inflation when I hit June or July.
Get through January.
Well, let's talk about the first half of the year then. We've talked about the disconnects. In fact, this show has been dominated by discussions about disconnects or perceived disconnects. Here's another one. You've got a better outlook for consumption. You're not alone. I get it, tax refunds, all of that. But then you survey the consumer, and they couldn't be more depressed about the present situation. The Conference Board came out with data yesterday, the worst read in more than 10 years. And that includes the pandemic, by the way. And this from Dana Peterson, a good friend of this program over the years. Confidence collapsed in January. Consumer concerns about both the present situation and expectations for the future deepened. They're looking at the labor market and don't seem too comfortable with things. And yet here we are on Wall Street projecting a better outlook for consumption. Are they just getting it wrong?
Well, I mean, you talk about a disconnect. Look at the party divide in most of those consumer survey stuff. So it wouldn't surprise me if, you know, the lingering stuff from the government shutdown, as well as a lot of the policy uncertainty, isn't hurting consumer confidence a bit there as well. I mean, look at us. We also get all obsessed about this rise in the unemployment rate. The level is 4.4%. And there are very few countries in the world that wouldn't take 4.4% unemployment rate. And then this also gets into that sort of K-shaped economy, you know, idea. Is it asset owners and high-income folks that are really benefiting, and you're seeing kind of a lot of pressure on that lower-end consumer, and you can imagine how that would flow through to kind of weaker and lower confidence. You know, the hope, I think, is from the big, beautiful bill, et cetera, is that you're providing stimulus to the low and middle-income consumer to kind of close that K down a little bit. So I think what you're seeing is a little bit of the K-shape and a little bit of policy uncertainty really impacting that negative sentiment.
So stick with small caps, stick with cyclicals?
Definitely cyclical. Small cap wasn't our favorite coming in. It's obviously worked quite a bit. You know, our view on small cap is last year it was all about rate cuts. You're getting these insurance or risk management cuts into a decent economy. If the Fed is now data dependent, they're not cutting really unless you get weak growth data. So really, to me, small cap has gone from a rates trade to a growth trade this year. So we like, we like that. We like the consumer side of things. And frankly, coming into the year, our view is own the under-owned traditional cyclicals, energy, materials, potentially banks. The banks hasn't really worked out at the large cap side. It's worked more at the lower cap side. But yeah, we still like the cyclicals trade. And if that puts you in IWM, no problem with that.
Do you think the White House has disrupted the banks trade?
They're doing their best.
Is that thrown that trade off for you?
Look, let's see when we come out of earnings how those large cap banks do. It's easy to say the credit card cap and things like that are negative for banks, but the deregulatory push is equally powerful. Our M&A targets basket has just been a monster year to date, which suggests that people are pretty excited about deal calendar activity and et cetera. So I wouldn't write off the large cap banks just yet, but yeah, there is a policy
That's
headwind
an
there.
earnings argument. I want to make the valuation argument. I think it's difficult right now for people to invest in the banks when they know, for now at least, some of those stocks have got a target on their back and they can wake up on any given day with a new announcement by the president that's going to disrupt that trade.
Look, I think that's fair, but if you look at like regional banks and the smaller banks have done fine. Where is the target? The target is on the large cap guys. So, it is a bit of a headwind without a doubt. What you hope is the deregulatory push, the deal calendar, and frankly, an accelerating U.S. economy. Banks are domestically facing cyclical. You hope they get a benefit from that. But to your point, I mean, what would you rather be in materials, owning exposure to silver and gold right now, or in banks? You'd probably go with materials. And frankly, the consumer trade to us is much more short-termish. That is, get this tax refund data, enjoy it for 2 to 3 weeks, and then probably kind of close that trade out.
Materials where the Oval Office could take an equity stake versus banks, Jonathan, where the Oval Office is basically going to be throwing darts at you, even if we don't see legislation for this interest
Got any
rate
companies in mind on who's next to the president takes a stake in? You don't have to answer that, Stu. We'll let you go. It's good to see you, buddy.
Thank you very much.
Thank you, mate. Stuart Kaiser there of Citi. Equities at the moment up a third of 1% on the S&P with an update on stories worldwide with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John. President Donald Trump saying the reshuffling of the leadership running his deportation efforts in Minnesota is going well. The president saying his border czar, Tom Homan, has been meeting with Minnesota's governor and the mayor of Minneapolis. Trump also saying Homeland Security Secretary Kristi Noem will remain in her post. Meanwhile, JP Morgan telling its investment bankers to work harder to close the gap with rivals on M&A. Sources telling us here at Bloomberg, the co-heads of global banking say the group underperformed last year. JP Morgan's investment banking fees unexpectedly fell in the fourth quarter as revenue from M&A advisory declined. And demand for long-duration Japanese bonds rebounding at the latest auction, with the 40-year bond drawing the strongest interest since last March. The results helping to stabilize sentiment in the long end of the Japanese yield curve, but strategists are warning that volatility is likely to persist until the country's next election on February 8th. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira in about 30 minutes. Up next on the program, awaiting the next Fed chair.
Interest rates are now at the lowest level in 3 years. By the way, when we have a great Fed chairman, I think we're going to have one. I'll announce it pretty soon. You'll see rates come down a lot.
Up next, Tobin Marcus of Wolfe Research, live from New York City this morning. Good morning.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
At 2 p.m. Eastern Time this afternoon, a Federal Reserve interest rate decision. The chairman will be speaking 30 minutes after that at 2:30 Eastern Time. The main event, though, I think for a lot of people in the equity market are the earnings later on this afternoon. After the closing bell, you'll hear from Microsoft, Meta, and Tesla. As for the Federal Reserve, under surveillance this morning, awaiting the next Fed chair.
Despite a bad Fed chairman, a guy that has we call him too late. He's too late. Jerome, too late, Powell. He's too late. He wants to keep rates as high as possible. Despite that, we've driven rates down. You know, when you're really good, you can get them down despite everything, because ultimately, it just sort of follows nature. Mortgage interest rates are now at the lowest level in 3 years. By the way, when we have a great Fed chairman, I think we're going to have one. I'll announce it pretty soon. You'll see rates come down a lot.
So here's the latest this morning. President Trump gearing up to announce his pick for the central bank's next chair as policymakers prepare to make the first rate decision of the year a little bit later this afternoon. Bloomberg's Tyler Kendall joins us now for more. Tyler, we've been waiting. It's like this rolling 1 week, 2 weeks. It'll happen in 1 week, 2 weeks. Is it going to happen anytime soon?
Well, John, at this point, your guess is as good as mine, because we've often heard conflicting statements from President Trump, sometimes signaling that he has made his decision, and then at other times saying that the process is indeed ongoing. Perhaps we could get an announcement soon, though very likely we will hear from President Trump, at least when it comes to the FOMC's decision later today, considering he has not let up on his criticism of the current chair, Jerome Powell. And today's post-meeting press conference is going to be Powell's first public encounter with reporters since he was served grand jury subpoenas related to the Department of Justice's investigation into the Fed's renovations to its headquarters here in Washington. And I bring that up because that has, of course, complicated matters on Capitol Hill for Republicans as we do wait this announcement on the potential pick to lead the central bank. As of now, it is our understanding that President Trump is still weighing those top 4 contenders, including the NEC director Kevin Hassett, who had been seen as a front runner, though worth mentioning the president has voiced concerns in recent weeks about losing a key messenger of his economic agenda. Also on the list, former Fed Governor Kevin Warsh, current Fed Governor Christopher Waller, then also BlackRock's Rick Rieder, who's gained some traction in recent weeks, according to people familiar with the matter. Sources telling Bloomberg News earlier this month that Rieder may be seen as somebody who could be confirmed more easily after Senator Tom Tillis, a Republican on the Senate Banking Committee who has been on this program before, has vowed to block any nominee until the legal matter against Jerome Powell is resolved. Though, John, I will point out early today on the Bloomberg terminal, a brand new story analyzing FEC records shows that Rieder has donated politically to some of President Trump's rivals on both sides of the aisle. Perhaps that may complicate matters going forward, but at this point, anything could happen.
Tyler Kendall with the latest. Tyler, thank you. I'm pleased Tyler keeps going back to the senator from North Carolina. His comments are so important here. It's not about the man. It's not about the individual. For him, it's about the process. So if you're sitting here thinking the president could announce this morning, and let's say he did, when you start thinking about the confirmation process, the senator from North Carolina is telling you he's not going to get up and open a door and let people through anytime soon.
No, which is why if you're the president of the United States and you heard our interview with Senator Tom Tillis, you're thinking, why would I make an announcement so soon? You want to potentially wait till you know the DOJ investigation to Powell is going to be wrapped up, because Tillis is not moving until that moment.
Tobin Marcus of Wolf Research has this to say. Rick Rieder is now viewed as the odds-on Fed chair favorite. We're unconvinced. We think both Kevins are still strong possibilities. Tobin joins us now for more. Tobin, I want your view on what is just holding things up here. Why is the president dragging his feet when he's told us for quite a while he knows who it is?
Well, I think he's still trying to find the best option among a set of options, none of whom offer exactly what he wants. Reader, the current perceived favorite, has a lot to recommend him, but he certainly is not a Trump loyalist by any stretch. As Tyler was just discussing, there's this issue about his political donations. With him now sort of in the spotlight for the first time, I think you're going to see knives come out for him a little bit. Larry Kudlow yesterday published an op-ed essentially saying, don't pick him, pick one of the Kevins. And, I think in a similar way to how when Hassett was the perceived frontrunner, that's when the White House started to get pushed back about the potential bond market concerns you could see there. So, I think he's cycling through his options and doesn't see anything that he's completely compelled by.
I loved your note, reading the tea leaves. When it comes to the tea leaves, to the discussion Jonathan and I just had about Senator Thom Tillis, do you think that is why this administration doesn't feel any urgency right now to have their pick?
I think Trump is I think the biggest holdup is the decision-making process itself. And I do think that Trump is still trying to find, the best person, with none of them being perfect. That being said, I take Tillis completely at face value that the probe by DC U.S. Attorney Pirro is going to need to be wrapped up and resolved definitively before he's going to be willing to let any of these people through. I think the view that Reader has some confirmation edge is basically wrong. I think once you get Tillis satisfied about that probe into Powell, none of these individuals are going to have any trouble getting through the Senate Republican caucus. Hassett's the person that markets have raised concern about, but he's been working in Republican politics for decades. He has very strong positive relationships across the Senate Republican caucus. So, the notion that you could get Reader through, but not some alternative, I think is fairly wrongheaded.
You're pointing to something I read this morning in the Wall Street Journal about the fact the president is looking for something maybe he won't ever find. You're talking about this perfect candidate, this unicorn. What does that entail? Can you define for us who that would be in front of this president's eyes?
Yeah, I mean, he just last week at Davos was very forward and very explicit about wanting loyalty. He specifically complained about disloyalty in those words. He talked about all these people seem great until you nominate them, and then they start making decisions that you don't like. They start, hiking rakes when he thinks it's inappropriate. That's the exact criticism he's leveled at Powell, who also came in with sort of recommendations from Trump's economic staff, but without that personal relationship. And he, of course, has regretted that decision. So I think he wants someone who he can rely on in that way and who's going to listen to his views as he continues to articulate them, but also someone who brings bond market credibility and doesn't raise acute concerns about Fed independence. And there's a deep tension between those two.
So we've got to keep our eye on the geopolitics as well. This from the president just moments ago on social media, a statement from him. A massive armada is heading to Iran. It is moving quickly with great power, enthusiasm and purpose. It is a larger fleet headed by the great aircraft carrier Abraham Lincoln than that sent to Venezuela. Like with Venezuela, it is ready, willing and able to rapidly fulfill its mission, and with speed and violence if necessary. Hopefully Iran will quickly come to the table and negotiate a fair and equitable deal. No nuclear weapons, one that is good for all parties. Time is running out. It is truly of the essence.
So the president is saying he wants Iran to make a deal. He then also continues to talk about the fact that they didn't make a deal, and there was, quote, Operation Midnight Hammer, which we saw last year. The president right now is setting almost a red line. Come to the table, or I am prepared, and I have my toys out there in the sea ready to go, and I am prepared to strike if Tehran does not feel willing to engage.
Tobin, how likely is it that we take on another kind of military front in Iran?
I think fairly likely. The president sure seemed like he was leaning towards intervening when the protests were at their apex a couple weeks ago. At the time, I think the lack of military assets in the region was one of the obstacles to doing that, along with some concerns from regional allies, along with, I think, some real questions about what efficacious targets might look like. Unlike in Midnight Hammer, where it was very obvious we were targeting the nuclear facilities, if you're trying to degrade their ability to oppress the domestic political opposition, what are you striking? Police barracks? I don't think anyone really believes that a decapitation strike against Khamenei, if they can even find him, would result in regime change, I think ultimately is what the president wants here. So, he sure seems to be wanting to strike. I think at a minimum, he's very focused on creating that optionality and leverage to be able to pursue a range of options. But it does seem like some kind of strikes eventually are likely.
Tobin, to that point, even if the United States were to get rid of Khamenei, doesn't the regime still continue?
Yeah, I think the only way that you see actual regime change is kind of cascading defections among the security elite, and we've seen no sign of that whatsoever. Generally, that happens when they're asked to fire on protesters. Like if they refuse to do so, that's when you can start to see elite defections. And of course, they just massacred thousands of civilians who were protesting in the street. So I think if we were going to see it, we would have seen it. Replacing one person at the head of the regime, I don't think there's any plausible scenario by which that would result in the entire regime turning over.
Tobin, it's good to see you. Tobin Marcus there of Wolf Research. Tobin, thank you. Just on that last point, developments with Iran and the United States, equities backing off from session highs, just trading a little bit softer in the last few moments. Also, check out this, Deutsche Bank. Get the chart up and let's have a look at that stock. Trading softer over in Frankfurt, Germany. That stock is down by close to 3%. Here's our latest reporting that Deutsche Bank has said its offices are being inspected by law enforcement officials. This is the quote from the bank. We can confirm that the Frankfurt Public Prosecutor's Office is on site in our offices. The bank is cooperating fully with the prosecutor's office. We cannot comment further. Reports came from the German news outlet Der Spiegel a little bit earlier on today that the public prosecutor's office is conducting a probe into suspected money laundering against unknown employees of Deutsche Bank, and they were citing information from the prosecutor's office. That's the latest on that bank. Any more information, I'll share it with you. Deutsche Bank over in Frankfurt, Germany, trading lower by close to 3%. Up next on the program, we'll catch up with Bloomberg's Mandeep Singh ahead of key Mag 7 earnings later on this afternoon. Plus, Danny has your morning movers. What a quarter from ASML. The stock is up by 6%.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Equity futures on the S&P 500 positive by 0.25% on the S&P. On the Nasdaq up by 0.8. On a Russell up by 1/3. Tech doing better. Thank you, ASML. Fantastic results. Those orders in the fourth quarter just blew out estimates. That's lifting the whole AI tech ecosystem, if you will, this morning, going into earnings from Meta and Microsoft after the closing bout. In the bond market, we look like this. 2-year, 10-year bond yields are just about unchanged on the session so far. For the Federal Reserve, it's going to be a snoozer this afternoon in the news conference, but the focus will be very much on the politics. There will be questions, no doubt, from journalists, repeated questions about the future of the Fed, the chairman's future, and his very punchy address a few weekends back.
And I just hope that the journalist PSA to you guys, and I know Mike McKee is prepared for this, when he says no or gives a very abrupt, short answer, please come back hard with a follow-up to make sure you can try to get something out of the Fed chair. Also, Jonathan, not just the politics outside the meeting when the chairman addresses the press, but also inside the meeting. Anna Wong, Bloomberg economist, talking about where does Governor Chris Waller put his dissent or not? What does he do when it comes to this rate cut? What does that mean for his chances of maybe getting the nod from the president?
After some two-way dissent at the last meeting, we are going to see some more dissent a little bit later this afternoon. Let's turn to foreign exchange. No dissent from the president yesterday regarding the dollar weakness, and that just encouraged another leg lower, weaker. This morning, check out euro-dollar. This is important. Euro-dollar is actually negative on the session now. So the euro is weaker. We breached 120 for a heartbeat, for a couple of minutes, and then we got some pushback. This is the question I've got. Can Europe live with 120? Is it willing to live with 120? And when I say Europe, I'm really meaning officials on the ECB. One official from Austria already pushing back against where the euro's trading and talking up the prospect of action further down the road if this continues.
Because they're concerned. What does this mean for the European Union? What does this mean for the Eurozone's exports? That is why they're concerned, and that's why this year is going to be dominated potentially by currency wars. This president doesn't care if we have a weak dollar. He thinks it's good for manufacturing, and he thinks it's good for U.S. business.
Euro-dollar this morning, 119.80. On our radar this morning, President Trump saying he's comfortable